Hi, good morning everyone, and welcome to the ATEC 2022 finalist selection event. My name is Voon Lee. I am the ATEC Programming Chair and also a member of the HBS Alumni of Hong Kong. The Asia Business Entrepreneurship Conference, or ATEC for short, was founded in 2019 by the Greater Bay Area University and Business School alumni clubs from Harvard, Columbia, MIT, and Stanford. ATEC believes that technology and entrepreneurship are key pillars in value creation and are deeply rooted in the brands of the universities that our founding alumni clubs represent. The mission of ATEC is to foster active engagement of our alumni, either as startup founders, mentors, or investors. Central to the annual event is a startup competition, which draws some of the most promising startups in Asia. And this year's startup participants were sourced by the regional university alumni clubs of some of the world's most elite universities, by accessing their networks for the most promising entrepreneurial talent. So today's agenda, we have a very exciting agenda for you here today. We'll kick off with a fireside chat with Gabriel Lee, who's the managing partner of Orchid Asia. And after that, we'll launch straight into a semi-finalist live pitches from 6 of our startups, followed by our esteemed VC judges panel Q&A. Then we will have a moderated discussion of all 23 semifinalists that have participated thus far. We will also have an opportunity for live voting by you, the audience, to determine the final startup that will get passed through into the 8 finalists that will pitch for the title of ATEC Startup of the Year in December 2022 at our live ATEC 2022 conference. I'd like to take this opportunity now to thank our sponsors, UBS, Morrison Foerster, Baker McKenzie, KPMG, and Cyberport. And I'd also like to take the opportunity to thank Invest Hong Kong today for providing this platform from which we are broadcasting. So with that, we have a tight agenda, so I'd like to kind of kick it off. So now I'd like to invite to the stage Gabriel Lee. Thank you, Gabriel. I'll give you a quick introduction to Gabriel. Gabriel Lee is the CEO, managing partner, and investment committee member of Orchid Asia Group Management, a private equity firm focused in investing in Asia, specifically in China, over the past 20 plus years. He has led investments in and has sat on the boards of such category-defining companies as Ctrip, EachNet, AutoHome, LifeTech Scientific, Zhaopin, and Sound4, as well as many others. Orchid Asia itself has about $8 billion of assets under management, with a primary focus on growth and late-stage investments. Orchid Asia has made over 150 investments, more than 50 of which are companies that are over $1 billion in capitalization, with over 80 exits through trade sales and stock exchanges all over the world, including Europe, US, Hong Kong, and China. And Gabriel himself, as this is kind of Asia's largest alumni-led technology conference, Gabriel himself graduated from the University of California at Berkeley, earned his Master's of Science from MIT, and his MBA from Stanford Business School. Welcome, Gabriel.
Thank you, Voon. It's a pleasure to be here.
So I know we have about sort of 20, 25 minutes for this chat, so let's try to pack it in with sort of interesting questions. So let's begin maybe with China. I think China is a lot on everyone's mind. Orchid Asia was established in 1993. It's got one of the longest track records of investing in China. I mean, you personally have been involved with some of the biggest first-generation successes, such as Ctrip and 51 Jobs and AutoHome. So you've certainly seen the investing climate for VCPE in China go through many cycles and many evolutions. But this time feels a little bit different, I think. Given the confluence of such broad factors as a global economic slowdown, geopolitical uncertainty, and maybe factors closer to home, such as US-China relationships and their ongoing response to the COVID pandemic. Could you share your views on how your investment approach might have changed?
Yeah, thank you, Voon. I think this particular cycle, much like other previous cycles, basically has caused a lot of difficulty in funding for many of the VCs and also startups. And I want to go ahead and share with everyone that the key things that are important in a startup company are actually the products, right, and the value added to its customers, right? This is the most important thing to focus on wherever you are in the cycle. I still remember in the first round of financing for Ctrip, we invested actually in March of 2000. at the very peak of the market, right? And the company's success was not due to whether the markets are high or low or somewhere in between. It was focused on serving its customers, right? And giving a very convenient and low-cost way of actually booking a hotel and also booking an airline ticket. And that was the premise of the investment. And so I think that while the cycles continue in this world, it's high, it's low. Right now, it's probably a little bit low, and it might be a little bit extended. However, it's very important to every single company that you provide a value-added service or a product to your customers, and we focus on that, right? When we make an investment, I think that really hasn't changed, because if you do provide a value-added service, you will be able to deliver value to your customer, and with that, your customer will continue to use your products and services throughout, a long period of time, and that is the key things to focus on, rather than just where the financing market is, or whether it's easy to raise money or very difficult to raise money. So our investment philosophy really hasn't changed. Thank you.
What do you respond to, I guess, claims right now? Because obviously it does feel, whether or not it's rhetoric or not, it does feel that we have shifted into sort of a new potential era, at least in terms of the various narratives that are being put in place. I mean, I understand very much, very fundamentals focused. You're looking at interesting companies, and that's what informs your, investing philosophy. But what do you think actually has changed? What do you think about these claims that, people are now making, that China is now increasingly or already is uninvestable?
I think the China market is a extremely large market. I don't think that the entrepreneurs will actually be affected by these policies, because when they go ahead and sell their products and services, the customer's making decisions, right, on whether they want to buy or whether they want to use their products and services. Okay, this is the key thing we want to focus on. If you're looking at the later stage, financing market, that's very different, right? That's more dependent on the public markets, and the public markets, no doubt, are very low right now. There's very few IPOs, but it's not always going to be the case, In 2008, there were no IPOs either for a period of time, for a whole bunch of reasons related to the financial crisis in the US. And with every single cycle, I believe that there are ups and downs, right? And one of the key things that I want to go ahead and communicate to all the entrepreneurs who are building their companies, you can never build a company in 1 or 2 years. You have to persevere. And these cycles, these financial cycles, they last for several years and then they come back, And so we should not be too negative during the bottom of the cycle. And at the same time, we should not be too positive at the peak of the cycle. And most people forget that. And when everything is great and it's easy to raise money and you can raise a capital at a very, very high valuation, it's probably at a valuation that is probably a little bit ahead of where your development is, right? And then during the bottom of the cycle, it's probably a little bit lower. And it's than what you would like in terms of valuation or in terms of your progress, right? And in reality, it's probably somewhere in between, right? So it's important to keep the much longer term perspective about what your products and services are and how they are of value to your customers. Okay, that's the thing to focus on, rather than just focusing on where we are, in terms of the capital markets or whether IPOs are going off or not. At some point in the future, there'll be IPOs again, right? And so we should focus on the fundamentals rather than just what's happening at the IPO and capital markets. Thank you.
That's very clear. So with that in mind, actually, with the view of kind of where we are potentially in this particular cycle, and with your experience of having navigated several of these by now, like what are the types of investment theses that you feel that you and your team are gathering more conviction around, whether it be particular sectors or types of business models?
there are two areas I think that are very interesting right now, which are causing major changes and opportunities in this world. One is the new energy transition, right? 10 years ago, when we looked at solar and lithium batteries and electric cars, they did not make economic sense, right? If you look at it today, it's different, right? It's been subsidized by many governments in the world, okay, this sector, encouraging kind of zero carbon emission power generation opportunities. But today, now we're seeing actual economic reasons for actually using solar, right? So for example, the increase in natural gas prices and oil prices in Europe has actually caused it very, very, the returns on investing in a solar panel in a home actually now is around 4 years, right, compared to 10 years, like several years ago. And so many of the families are making these decisions not only to lower their cost of electricity, but also to make longer term investments based on economic reasons, right, rather than government subsidy reasons, to go ahead and use solar panels and energy storage as a way to secure their energy security in the future, right? So these are things that are major changes, and that will drive a lot of smaller companies to emerge, right? And manufacturing companies to take advantage of these opportunities as the growth will actually continue over the next 20, 30 years. Now, the penetration of solar power is only around 5%, right, of the total global energy needs. And so therefore, we could see this moving up to 30, 40, 50%, maybe even 70, 80% over the long term. And so that's an opportunity. The second is actually healthcare, right? Healthcare, there's a lot of personalized medicine opportunities where the recent advent of technologies in this area to lower the cost of identifying genes and DNA, in different viruses, and different bacteria and in people actually lead to opportunities in these areas. So these are two areas I think that are pretty interesting. Thank you.
That's very telling, actually, and very, very present as well, given today's Invest Hong Kong theme is sustainability. So the new energy shift, I think, is a lot on everybody's mind. One thing also that is on everybody's mind is the ongoing 20th National Party Congress that's going on right now. Given what you just said about the types of sectors that you're interested in, do you find that anything that was said over the last week or so kind of reinforces some of your convictions? Were there any particular surprises that came out of the, I guess, the speeches that were made this week that may impact how you think about your investment outlook, specifically for China?
China has always supported technology development, right? Whether it's AI, whether it's healthcare, whether it's in solar, new energy. The government has put in huge amounts of support, right? Economic support in terms of tax breaks or tax reductions or even some subsidies in order to drive the development of these industries, okay, that I've just mentioned. I don't think that's changed. I'm very happy to hear about what happened yesterday in Hong Kong, and the government also stepping out and providing additional support for these sectors to attract talent into Hong Kong. It's a great opportunity because in Hong Kong, it's all about people, right? And if you have great talent that are willing to go ahead and invest in Hong Kong, this would be actually a very good development for the economy here locally. Thank you.
Let's narrow the focus down a little bit down to the technology sector in China. It feels like this is one of the areas where, basically the rubber hits the road. A lot of confluence of all the types of macroeconomic and possibly microeconomic factors come into play here. So, obviously life in China, economic life in China has been dominated by technology companies in the last 10 years or so. You yourself have also participated in this and have backed many of the companies there. We saw a sharp ramp up in terms of, rhetoric and policy as part of the Common Prosperity Drive. There's a feeling maybe that has shifted a little bit, given sort of the economic realities. But then there are exogenous factors like what's happening with US-China relations. And I guess the most recent and significant event is kind of the US chip ban. Given all that, like, where do you think we are now? It feels like the tech sector in China and the tech sector in the US are now potentially placed on divergent paths. Are we seeing like the advent of kind of a parallel tech universe in these countries? And what does that mean for us globally and then for you as an investor?
Okay, we don't actually invest in semiconductors, right? That's not a sector that we focus on. But I will comment a little bit on your question. I think that the semiconductor industry is very complex. It's huge, right? It is over 600, billion US dollars of sales each year. And I think that the companies that are in the sector, they actually focus on not only cell phones and PCs and all of these, even cars, and whether it is 14 nanometers or 2 nanometers technology, you can still make the product. Okay, there's always ways to make the product. It's whether you can actually make it as efficient as your competitor at the cost that is lowest. China traditionally have been a very, very large manufacturing country. It manufactures lots of different products. In fact, many of the products are actually shipped overseas for additional processing and value added in order to serve the US customers in the US or Europe. So any single time we see policies that disturb this, it will unfortunately result in higher prices to the customer. Okay, but the products will be made, right? Because there's demand for these products, right? And so one of the things that are causing this downturn, right, that we're seeing in the lack of IPOs is probably not so much policy, that is happening in China, but more about inflation rates, okay? So if you have higher prices, right, for products that are produced, wherever they are, whether it includes semiconductors or not including semiconductors, there's inflation. If there's inflation, the interest rates start to go up. So if we look at more macro view, right, higher than I think the level of questioning that you're asking me on policy, is the fact that interest rates go up, the cost of capital goes up, right? And so when cost of capital goes up, what happens is that it is much harder for companies to actually raise money, right? Especially startups, okay? And that's bad, and that is hurting all over the world. As the IPOs are not just slowing down right now in Asia, it's actually slowing down all over the world. If you look at the IPO financings, they actually have been down, I think, at 1995 levels right now, okay? And that's caused by more about the cost of capital and financing being more expensive. And so that hurts the startup companies a lot more, right? So I think that having agreements and world peace is very good for economies, right? And when you don't have that, it's more difficult, right? And so that's what we're seeing right now. This also cycles, it goes up and down, at some point in the future, it'll get better, right? Thank you.
We'll definitely talk about valuations. If we could just dwell on that for 1 minute. I guess the concern was less about companies, making sort of low-end products, and it was more impacting the idea of so many of Chinese companies now, their value proposition is around artificial intelligence and machine learning, and the chip ban significantly impacts, potentially their ability to progress those particular business models. And obviously, there's a sense right now that potentially companies were stockpiling a lot of these chips in advance. But do you think that impacts like the investment outlook for those types of companies sort of going forward? And when I say those types of companies, it's very many companies in China because the idea of being able to process data across many different industries is actually kind of at the core of what makes some of the most exciting companies in China sort of quote-unquote investable.
Right. I think that AI is a great opportunity, but AI is a very, very complex industry. There's basically image recognition, right? There is analytical AI for machine learning. Then there's AI applications for robotics, and also analyzing data in order to go ahead and make forecasts. I mean, so it's a very, very big industry. I think that many of these entrepreneurs, they actually add value by creating the software, right, and the intelligence behind those products, okay? And I think that the applications are so wide that many industries will be impacted by this, right? Whether it is in China or outside of China, okay? And I don't think that just because the product is made in China, that another country, another company outside of China cannot use the product. I mean, I know many companies in China, like for example, in the Middle East and Southeast Asia, that uses China software and AI, okay? And they're doing quite well. Okay, they're expanding their business in whether it's fintech and online lending, or they're helping companies, with providing SaaS services to analyze their customer data in order to go ahead and help them expand their markets. I think there's opportunities not only inside China, but also outside China to go ahead and use their AI technology to develop in China.
Great. You alluded to valuations. Public market valuations obviously have come down significantly. Mm-hmm. Private market valuations most likely have as well. Do you think there still exists a disconnect between private and public market valuations? How does that impact how you think about investment opportunities now?
Well, the public market valuations right now are clearly very low. I think many people would agree with that, right? The private valuations are also slowly adjusting to the valuations that we see in the public markets, as you expect. However, it takes a little bit of time, usually several months, several quarters, right? It depends on basically which companies, which sectors. But on the startup side, the valuations are generally not as tied to the public markets because they're very far from the public markets.
Actually, let's now shift for, I guess, the last 5 minutes talking about startups, because core for ATEC is this idea of encouraging, technology, entrepreneurship, and that's why we've chosen kind of to shine a spotlight on, very early stage, potentially up-and-coming companies across the region. What advice would you give to early stage or growth companies navigating what seems to be a very uncertain environment right now?
So I would mention 3 points that I think entrepreneurs should think about, right, in their businesses. The first is, going back to what I said earlier, is to focus on your products, services, and what your customer needs are. Where's the pain point, right? Because if you don't focus on the customer, I don't think that the company can be moved in a direction that can serve the customer needs if you don't even have an understanding of what their pain points are. So that's the first thing I think people should realize, and the most important. The second is that you should have a backup plan, right? Because things don't go as planned in a startup. Okay, things change every 3 to 6 months, or even faster. The financing market changes, the competition changes, your customer needs changes, and you should have a plan, right? So don't always manage your company with 2 months or 3 months of cash flow, right? You should have a little bit of buffer, right? And have a plan for if things don't work out the way you think, that you have a backup plan, right? So it's important, okay? Whether it's from your existing investors or from angels or from a bank, a loan. These are things that I think many entrepreneurs should think about. And the last point I'd like to mention is that is about, if you got the first 2 points right, okay, the last point is about perseverance, right? No company gets built in 6 months or a year, and you have to go ahead and persevere. And it's very hard. You will deal with challenging times. There will be people who tell you that you can't do it. There will be problems with your products and services. And perseverance is very important. And we all come across those challenges in life. And overcoming them is the reason why you could become a success. Thank you.
And those are very important points. Dwelling on, I guess, points 2 and 3, having a backup plan and being able to persevere, it's a very challenging fundraising environment right now. Do you have any, specific tactical advice for startups on how to potentially think about how to raise capital in this? How do they think about potentially doing a down round, versus, acquiring, what may be the required capital to ensure the survivability of the business?
Yeah, I think it's more important to focus on getting the required funding, right, to complete your project and also the product or service. That's most important rather than just the valuation, okay? I think that in terms of specifics on what you may consider doing in a tough environment, number one, go to the people that know you well, right? Okay, so these people may be your customer, right? It may be your supplier, it may be your friends, it may be your existing investor, it may be someone else, okay? I don't know, it depends who you know. These are the people that are most likely to believe in you and to support you, right? And to be able to make those decisions on financing in the shortest amount of time, okay? And these are the people who actually have a stake and interest in your success. And I think that that is a good way to go ahead and get through a difficult time such as this.
Thank you. That's very practical and very inspiring. As we wrap up, actually, it does feel like there's a lot of doom and gloom out there right now. Maybe we could just end on a high note. Like, what are you most excited about? Both professionally and then potentially kind of personally as you look forward to the future.
Yeah, I'm looking for great, talented people. In every single investment that we make, I think the major reason why we actually succeed is because of the team and the leader, right? And understanding their motivations, understanding their skill set, right? Helping them to become more successful. These are the things that we're looking for.
Great. Thank you very much, Gabriel. Thank you very much for your time today and for sharing your insights with us.
Thank you, Woon. It's a pleasure to be here.
And we'll hear more from Gabriel as well, because Gabriel will be one of our VC judges this morning. Thank you very much. So now we'll shift to one of the more exciting parts of the morning, which is going to be the ATEC 2022 semifinal pitches. For background, we received this year over 80 startups nominated by 40 participating alumni clubs to participate in the startup competition. 23 startups were passed through the initial screening process and subsequently pitched live to our ATEC judges panel in the last few weeks, which the judges panel comprised some of the most experienced VC investors and advisors in Asia. 5 semifinalists were then selected based on the judges' evaluations, and it's these 5 here that you can see here. So that would be Augmentus, Cheetah, Good Food Technologies, i2Cool, and Syncell. And for today, we will actually have 6 additional startups pitching for the remaining 3 finalist spots. So we're going to pass 8 finalists through to our final event in December. We have 5 already chosen. Today, we will be choosing 3 out of the 6 startups that we'll be pitching today. Can we see the 6? So the 6 startups that we have pitching today are EggLogix, Fano Labs, FQX, Grand Rise Technology or InnoCotex, Matchmo, and Surgibox. And so, of those 3 finalists, 2 will be chosen by our panel of esteemed VC judges. Today we have with us Anna Cheung from Hong Kong X Group, Thomas Cho from Morrison Foerster, Irene Chu from KPMG, and Gabriel Lee, once again, from Orchid Asia. So once again, our judges will be, out of the 6 startups pitching today, our judges will select 2. I said 3 finalists. That's because the last finalist, the one finalist, will be picked by you, the audience, both in person here today and also voting online. Voting will begin shortly after all the pitches are finished, and I will let you know how to go ahead and do that. So without further ado, I think we will actually start the pitching competition with Fano Labs, a RegTech specializing in language AI and speech technologies. Each of these startups will have 5 minutes to pitch, followed by 8 minutes of Q&A with the judges.
All right, okay. Good morning, I'm Albert Lam. I'm the CTO of Fano Labs. So today we're going to talk about language AI for RegTech and wealth tech. So let's introduce what we are. So actually we enable business by using language AI. So actually we are Hong Kong U spin-off, and we have spent 6 years after our own establishment, backed by the decade of research. We conduct our research lab. Right now we have more than 60 full-time staff, 75% are R&D staff. So we are serving 40 plus enterprises, government departments, and also we also recognize the Hong Kong government as a designated local research institution. So our core team, so I myself, a Hong Kong U graduate, get a PhD from Hong Kong U, and founded by Professor Victor Lee, which is the chair of the information engineering, is also an MIT alumni. And our CEO also a Hong Kong U graduate. So we believe in research. So we commercialize our research, and then we so they make it in the products to help in the commercial well. So our technologies is basically, can summarize by 4 points. So what is about our speech recognition? We can turn speech into text. We support mixed languages, and then we do the voice biometrics, because we can understand voice print and use voice print for the speaker verification. For why, after we turn speech into text, and we try to understand the text but classify the intent, the entity, and the pattern. And so for the feedback, we can turn text into speech by using custom voice. So our solutions work for the compliance. So for the global financial compliance market, actually it's a $300 billion USD market. And 181 billion is for the various financial service industry to try to spend on the compliance. 135 billion is for the stock loss due to fine and penalties, and 50 billion is for the fine levy by the regulators. So in Hong Kong, just for 2020, SFC has fined 3 billion Hong Kong dollars just on the sales compliance. And among all those compliance, sales is one of the key regulatory focus. So here's some of the examples we have. So you can see for some of the banks, you can see the fine for $10 million, $40 million, and so. So, and Hong Kong MA and also SFC also announced that they want to adopt new technology like AI to address some of their compliance issues. And as the great find, why not spend some money and automate the compliance processes, which can only be done by human before. So here's our solution. We try to convert speech into text, and then try to do analysis on all the calls. We have supplied by the company, and then we can spot out any compliance issues, and then try to take remedies after follow-up. So let's see how the solution works.
So after we upload all the code to the system will automatically doing all the scoring and analysis, and if there's problem appear, it will highlight in red. And when we review the code, you can see all the transcript here, and on the right-hand side, there are all the scoring items. For example, whether the agent asked the customer name, their birthday, and we can review some of the key issues, like whether they speak about the investment disclaimer and the risk survey has been done. For example, the recording alert didn't spoken out, and there are high-risk items that I can review instantly that, other than the mis-recording alert, there are also mis-selling statement being spoken. Let's hear it, what is being spoken at the time.
想問多一句，咁會唔會有機會蝕晒啲錢㗎？
我啲客人未蝕過錢㗎。
The customer worry about whether the investment will lose all the money, but the agent say, no way, our customer never lose money. So this kind of mis-selling statement is being captured and highlighted here so that the supervisor can review and do all the remedies before being finalized by the compliance regulators.
So one of the key capability is we can handle mixed languages in one call. So let's see an example.
係今日咧，好多謝 Dr. Miles 咧，同我哋嘅同事介紹咗有光科技嘅一啲 technology solutions 咧。We are very impressive and really interested in knowing more and obviously collaborating further. I'm sure that will bring a lot of success with our clients. 其实呢，除了香港之外呢，我们觉得在那个大湾区里面呢，我们还有更多的合作机会了。谢谢各位。
So we are also both VecTech and SupTech is our VecTech clients and also our bank in financial institution. We are also well recognized. So one of them is recognized by Forbes Asia 100 to watch, and also a winner of the Hong Kong MA Global VecTech Challenge. So I guess that's the end. Thank you.
Thank you. Yeah, we'll shift now to judges Q&A, please. Judges?
Hello. Okay. Thank you for the presentation. Maybe I'll start. Just curious, I thought there may be quite a few speech-to-text type solutions out in the market. How are you different, and why are you choosing to target the compliance sector? If there are other solutions out there, what's the barriers to entry for them to train to target this segment?
So, okay, our key technology handle the speech and the language technologies. So I can say it, so Hong Kong is very challenging in terms of languages because Hong Kong speak Cantonese, Mandarin, and English, and then mix them all together. We also have different kinds of slangs. So I can say the language environment is very challenging. It's, Wolford, I can tell you that we are doing the best among all tech companies on the language related solution in Hong Kong. And because we are using cutting edge research, so we are able to generate the highest accuracy among all the solutions which can find available in the compliance market. So why we're targeting compliance? Because we see this is a very promising domain we can work on. So we find our solutions just fit to this domain very well. So that's why we work on this compliance. Thank you.
So question, are you only currently targeting Hong Kong market, given the languages differentiation you just explained?
Okay, no. So in fact, we position ourselves to work on language which is for minor languages. I can consider Cantonese as my language, even though it's a lot of people speak Cantonese, because the resources for Cantonese is very small. So therefore, we define Cantonese as low resource language. So we target low-level language. Of course, high resource language we can also work on, like English, Mandarin. We don't have no problem at all. But besides Cantonese, we also work on some other minor languages like Thai, Arabic, Indonesian Bahasa, and different version or different dialect of English. So we are targeting the countries in Southeast Asia and also the One Belt One Road countries. So that's our issue. So we are experienced in how to handle minor languages from scratch. So therefore, we can do all the minor languages.
Albert, you mentioned that the total fines globally in 2020 was 15 billion, and in Hong Kong, SFC issued Hong Kong 3 billion in fines. So, with these additional languages that you are working to include in the platform, I don't think 15 billion is the right market, right? So, how do you build from the 3 billion in penalties to other markets, and what is that real market opportunity there?
So previously, we can say the compliance is mainly done by human. So maybe in the bank, they have their own compliance team. If the bank spend a lot of money on the compliance team, also they may get fined from the regulators. So our solution is try to help them. So maybe they can save some costs in the compliance team and also save some costs from the fine. So we find that Hong Kong is one of the most important financial market, and we start from Hong Kong. And we find that our compliance solution work, and then we try to expand to other financial market, like maybe in Singapore, in other country, we have the focus on financial industry.
So how many customers are you working with right now to refine your product?
So we have more than 40 customers, including a lot of banks and or even regulators. So therefore, our solution help regulators to define some of the rules, and then the banks, so they understand what the rule they need to follow. So most of banks are big enterprises. So because we do B2B business. Thank you.
Are any of them close to purchasing your product?
Yeah, in fact, yeah, some of them purchase a product. They're using a product.
Using a product right now, okay. And they're happy with it, right?
Yeah, they're happy with that.
Okay, good. Thank you.
So you mentioned the Hong Kong Monetary Authority is working on a speech-to-text tool. And how does Final Labs, are you building it for them, or how is that relevant to your business?
Yeah, in fact, we are building for them. So they already announced we are one of the winner in the previous setup they want to do for the speech-to-text technology. Yeah.
And with respect to anytime you have these type of recognition metrics, you've got privacy implications. And I guess, are you choosing RegTech because most of the banks are going to require their clients and employees to opt in and just accept the analysis that happens in connection with the speech? And then what happens, do these banks have a set process in case there's double checking that needs to be required in case there's a false flag raised?
Sorry, some of them.
So technology is helpful to screen out potential red flags. Presumably there's still a human element involved in looking at the red flags and determining whether or not there really was a violation. And is that something that you're involved with in setting that protocol, or is that up for the banks to decide?
Yeah, so we're helping them. So we are doing actually what they want us to do. So we find that there are a lot of opportunity there. So we are actually getting some very positive feedback from the client, and because we're doing subscription basis, some of them actually renew our subscription and continue to use our solutions. Yeah.
Can you share a little bit of the history of the company?
Okay.
When did it get started? How long was the research? Just a little bit of the milestone. And my second question is, what is your revenue or profit model?
Okay, so basically we find in 2015, and we are actually start with a research lab at Hong Kong U, and then we find our solution, our technology or research is useful, maybe useful in the commercial world, so that we find the company. And then we are located in Hong Kong Science Park. Right now, we have multiple offices both in Hong Kong and in Shenzhen and Guangzhou as well. And right now you have 70 staffs, majority in Hong Kong and in R&D. And we are actually start with the speech solution and start for customer service at the very beginning. And then we find it for customer service, and then we can actually use the solution for compliance so that we turn our focus to compliance. So for the revenue, as a private company, at this moment I cannot reveal that, but I can tell you that we have positive cash flow, and we are going every year 2 to 4 times.
I mean the model, how are you charging your
Okay,
customers?
so we are doing a subscription model, and we build a solution for them, and then they subscribe for 1 year or 3 years, and then after that they renew it. Yeah, so we charge for subscription fee mainly.
And so for your multiple customers, do you have to customize for everyone, or is it more quite scalable?
Yeah, it depends on how the requirement of the client. So if the domain is very specific, and we may need to acquire some of the data so that they can modify it or improve our solution for them so that increase the accuracy. It highly depends on the client's need. So we can do customization. If the solution is already good enough, they may not need our customization. Yeah.
Thank you, Albert. I think that's all we have time for today. So thank you very much. Thank you for participating.
Good morning, judges. Before I get started, I got to make sure everyone can hear me clearly.
Yes, we can.
Thank you. Good morning, judges. My name is Tun Nap. I'm the founder and chairman of ATEC. Today, I'm going to showcase how our revolutionary excellent technology will bring new fertility hope to many mothers. As late marriage has become a norm in many developed countries like Hong Kong, more women give birth at older age. And infertility is the biggest health challenge for advanced age women. And in fact, this is the main driver of the biggest threat of human mankind, super low birth rate. So that's why for women with fertility challenge, in vitro fertilization or IVF is the only option for fertility restoration. The procedure is basically comprised of 3 major steps, including the egg retrieval, fertilization, and the implantation of the embryo. Now, many women, however, did not know IVF has its own limitations. Similar to lateral birth, IVF success rate is also limited by age. It is because the number of eggs produced in the aged mother is much lower compared to the younger counterpart during the ovarian stimulation, or we call superovulation procedure. And what makes this situation even worse is not all the eggs retrieved are usable. As you can see, the wet immature eggs will be discarded. Only the green mature eggs will be retained for IVF. So that perfectly explains why IVF success rate drops along with age. And to compensate for the low success rate, women with advanced age have to undergo multiple cycles of IVF treatment, which cause a lot of pain and stress. And that's why up to 40% of women develop depression and anxiety during IVF. And this condition will double the risk of infertility. And therefore, to tackle this 40-year-old challenge, we team up with experts from 5 different scientific domains to develop what revolutionary solutions to the problem. And I'm happy to tell you our 7 years of hard work has paid off. We are able to translate our research finding into a series of 8 improving solutions known as excellent technology. And today I'm excited to showcase 2 excellent solutions. The first one is Egg Boost, which increases the number and quality of the eggs. The second solution is Egg Chat, which helps avoid the use of poor quality eggs in IVF. Egg Boost makes the use of our proprietary microfluidic chip that allow co-incubation of 2 discarded cell types, including a specialized cell isolated from the menstrual blood and the discarded immature oocyte. And after overnight treatment, a usable IVF-ready egg will be produced. And we have established that the Egg Boost has produced more usable eggs for IVF. And most importantly, it reduces the number of genetic abnormalities, which is a huge deal for the health of the baby. Another important area we focus on is fertility preservation through cryopreservation, or commonly known as egg freezing, which is very popular in recent years. And this popularity is reflected from the robust increase in egg freezing markets driven by mainland China and in the US. Now, for women who undergo egg freezing, they expect the frozen eggs will be usable after a certain year for IVF service. However, that may not be the case in reality. Here's why. Current ratio-based egg quality assessment may not be able to pick up the bad quality eggs simply by appearance. And that could be confusing sometimes. Imagine if the bad egg got stored, it will have a huge negative impact to the woman. So therefore, to secure the fertility hope, we just develop ATEC. It looks into the precise gene information in the eggs and provide a simple quality grading for reference. ATEC has been launched in June this year. With ATEC in place, we expect the IVF success rate will be increased and most importantly, develop the idea of smart egg freezing. In terms of business development, we have great people working in healthcare and biotech industry to capture this multi-billion market. We have just launched our free ATEC service and will promote to the other regions. And we are also working with other industrial partners to promote our technology. And I would like to highlight that our technology perfectly aligned with our national plan and will promote the Greater Bay Area collaboration. In this year, AgLogics has gained a strong traction through business development, media exposure, and different competitions. And we are glad to tell you that in this month, we made 2 important milestones, including the collaboration with private clinics, as well as a very important industrial partner. And the accomplishment would not be successful without the support of the foreign parties. So by creating more fertility hopes with excellent technology, we wish the dream of a complete family will be fulfilled. Thank you very much.
Thank you, Dr. Lee. So now we'll move to judges' Q&A. Judges, you may begin.
Yeah, how many successful cases have you had so far for patients?
Are you referring to egg boost? If
Yeah.
egg boost is undergoing a clinical trial, so this is the clinical trial we are undertaking at the University IVF Center. We have established our first endpoint, meaning that we have proven the number of eggs has significantly increased. So we are working with other 3 endpoints, including the fertilization rate, breast success rate, and most importantly, the live birth. So for these 2 endpoint number 2 and endpoint number 3, we hope we'll be able to finish next year. And for live birth, it will be more challenging because we are using a very stringent double-blind randomized trial. So it will really depends on the chance of picking the right egg boost egg for the live birth procedure. But we are very confident that these 2 endpoints will align with our finding in the animal model. So for your information, in the animal model, we have shown a very significant increase in fertilization as well as blastocyst rate. That is the big picture of egg boost. And for this particular study, we hope we can complete the whole clinical trial in 2 years, and hopefully we deliver within 3 years' time. Thank you.
That's great. Do you have many patents that you filed around the world and in China and Hong Kong to protect?
Yes, that's an excellent question. As this is an important technology, we have filed the patent to the USPTO, China, as well as the European bodies.
On a related question, have you engaged in freedom to operate analysis in terms of other competitors who may have competing patents?
Well, I can tell you the idea of rescuing eggs from the immature oocyte or mature oocyte has been done previously, but they all fail. One example in point is Oversize. which has been listed in NASDAQ back in 2014. So the idea, the scientific idea is very similar, but the issue with them is that they use stem cell, first of all. The stem cell was isolated from the ovary of the subject. And secondly, this procedure is invasive because they have to extract the mitochondria, the energy organelle, from the stem cell and then inject back to the eggs. So you can imagine this procedure is tedious, expensive, and invasive. So that's why, even though they got this in NASDAQ and successfully funded by many investors, in the end, it was not successful in the clinical trial. So our technology is very different in the sense that we address all the deficits faced by the over science. Our technology is natural, autologous, and there's no genetic transfer from the other parties, the third parties, which is a huge deal in reproductive medicine.
I'm just curious, when you touch human life, it gets pretty sensitive. Have you thought about all the potential legal exposure? You know, you might get sued by people if they say, well, because you tested the egg and you damaged it or something. I mean, all the legal risk around your technology?
Okay, that can break down into two areas. The legal issue with egg boost and egg check. So let's talk about the legal issue with egg boost first. First of all, we have obtained the IRB approval and the ethical approval from the Reproductive Council in Hong Kong. They have been reviewed. The procedure has been reviewed completely, and we are legally to conduct this trial in Hong Kong. And we don't expect there will be a huge legal issue, largely because we are using the discarded material, and there's no genetic transfer, and we did not have undergo any selection in this process. Now, for HChat, similarly, we are also using the discarded oocyte for the quality assessment. And this quality assessment is mainly for the benefit of the subjects. We are not asking the subject to select embryo based on this procedure. So I don't see any potential significant legal issue against these two technologies.
Hi, can I ask? So at this stage, it's not yet commercialized, right? You're still conducting human trials.
Okay, thank you. Thanks for giving me a chance to clarify. For egg boost, as I showed you earlier, it's under clinical trial. Even though we have shown we have accomplished the first endpoint and can be marketed as a technology for increasing the number of oocytes, we are not confident until we finish all the endpoints. So that's why the commercialization of egg boost will be likely to be in 2024 or 2025. However, for egg check, as I mentioned earlier, we have already launched egg check service free of charge in the InvestHK clinic at CHK. As I also mentioned in my PowerPoint, we have established the first private clinic partnership of HCHEC in Hong Kong, and they are ready to be offer to many IVF customer for now. Yeah.
So with that current experience, so have you already kind of design how you're going to charge for the service?
Yes, that's another question that I got asked many times. So my philosophy is not to give a whole lot of stress to the IVF subjects. We charge based on the current tests offered in the IVF, like PGS, PGD, and the NIPT test. So the range would be somewhere around 5% to 10% of the IVF procedure.
So you mentioned that you've set up a clinic, which is a big milestone. In terms of, once you go commercial, what is the plan for scaling in terms of the distribution of the service? Will you be building your own clinics? Will you partner with existing hospitals? And how much of that will be beyond Hong Kong?
Okay. So in terms of the business development, in order to scale up, for Igbus, we are going to license our technology to some big industrial partners. And that can be done by licensing. And meanwhile, before that, we can also establish collaboration with them, strategic collaboration, and they can do it by milestone payment to us. And for InvestHK, we are going to license these tests to those clinics to run as well. So this is largely based on the licensing thing. And what I would like to stress is when I talked to people in Singapore yesterday, I talked to the NUS people specialized in IVF yesterday. The scaling is really dependent. The progress of scaling is really dependent on the regulatory condition in the particular geographical area. So for Singapore, I think that is the best timing because last year they already relaxed the cryopreservation procedure regulation. Previously, they require the woman to get married in order to have the egg frozen. So we foresee that there will be a huge demand of InvestHK tests for these cryopreservation subjects. And for China, I think it would be more difficult because the regulatory approval is more stringent. But we have already kicked off our regulatory approval process. We have with NMPA by identifying a CRO for this application. Yeah.
Thank you, Dr. Lee. That's all we have time for this morning.
Thank you very much.
Thank you for participating.
Thank you.
And now we'll move on to our next startup, which will be Surgibox, the ultra-portable operating room in a backpack.
Good morning, how are you?
Good morning, Mike. Could you hold on 1 second? We're just getting you up on screen. Hold on 1 second.
Good morning, everyone, and thank you so much for having me. My name is Dr. Mike Teodorescu. I'm co-founder and CEO of Surgibox, and I'm grateful for your invitation as well as support of Harvard Business School Angels. The problem we're solving is that there's immense unmet need for safe surgery worldwide. There are 143 more million surgeries need to happen every year than there is capacity for, which results in 18 million unnecessary deaths every year. And between the disability and the loss of life, that is a $12.3 trillion GDP loss annually. There's also a problem for physicians who have to operate in unsafe conditions because bloodborne disease result in about 85,000 infections every year. So what we're trying to do to address this problem is to bring an ultra-portable solution that does not require an electrical grid, that protects both patients and surgical teams and brings safe surgical kits to the point of need. We also plan to increase procedure efficiency at hospitals that do not have enough capacity for ORs. Our system is of two parts. First, a reusable component, which is on the left-hand side. The reusable component is our smart control module, as well as our certified battery. And on the right-hand side, we have a single-use inflatable drape as our sterile component. This allows for a full surgical team to participate in surgeries. There are numerous application areas. OBGYN, particularly C-sections, are a large application area in need of product like this. Ambulance and emergency and bedside field care. Here we have a picture in the MIT ambulance. Limb surgeries are common in situations of disasters. Oftentimes, a crushing injury requires a surgical procedure called fasciotomy to resolve the pressure inside the tissue, and that requires a surgical area. General surgery involves thoracic, abdominal, and back surgery. And the market is quite large. We have acute and pre-hospital care as one segment, government the second, and surgical NGOs the third. Pre-hospital care and acute care is about $7.8 billion annual TAM. In many countries, we have ICU surgery opportunity as well as opportunity for service close to the point of need. We've had a fair bit of traction with government. We've won 2 contracts with the Air Force. We've been X-Tech search winners with the Army. A new contract by MTech to deliver units to Ukraine, as well as we present top venues. We've had interest from a number of top government distributors, and we've published in military medicine with government physicians. Surgical NGOs are another market that is fairly large. We also made good traction in. There are over 3 million surgeries performed by NGOs every year, which out of which we are applicable to about 15%, which gives us an annual TAM of 248 million. We've had a long-standing partnership with Doctors Without Borders. We have actually participated in the design process of our product. So we have designed a product that fits their need. There is competition in the space, but it's mostly coming from mobile surgery market, which in itself is not a small market. It's a $2.5 billion market every year. And the competitors are however, largely trucks and vehicles, which involve 100 times logistical footprint of what we are doing. Our business model is a typical razor and blades model. We have the reusable component here, which involves our certified and airworthy battery, as well as the smart control module, and the single-use surgery bubble, which comes in packs of 6 or 12. We have here a typical hockey stick. I don't need to dwell too much on this one, but essentially we're first driving our revenue from government and NGO, and then we're entering the acute care market in different segments. We've had a number of peer-reviewed publications, as well as a lot of third-party certifications as you have to do with medical devices. We are an ISO 13485 manufacturer. And we've won a number of competitions before, as well as presentations. For example, Mass Challenge, Harvard President's Challenge, we're winners of Harvard Business School's New Venture Competition. We have presentations as TED Med and other venues. The product is covered by a vast network of intellectual property filings, as well as trademarks and trade secrets. I'm very happy to say that I'm surrounded by, and grateful to say I'm surrounded by people who are much more competent and smarter than I am in terms of their, in the fields that are needed for this kind of work. So we have 3 physicians. Dr. King is a professor at our medical school together with Drs. Lynn Teresco and Smalley, who are his students, his co-founders. Forbes 30 under 30 brilliant electrical engineer Sashi, and brilliant MIT alumna Macaulay are on the engineering side, and I and Kelly, retired Lieutenant Colonel Kelly, are on the business side. We have a vast advisory board that draws from different backgrounds, which is very helpful. These 4 are physicians. We have former executives and current executives like Dr. Rosenthal, former CSO of Boston Scientific, and Oded Biran is current executive CEO of another company. We also have lawyers, finance experts, and professors on our advisory board. And we hope to receive your support so we can continue bringing surgery and where it is needed most. Thank you for your time. Look forward to your questions.
Thank you, Mike. We'll move on to judges' Q&A now. Judges, you may begin.
Mike, do you have any competition?
As I mentioned, the competition is in terms of positive airflow systems, of active airflow systems, it would be these trucks. So they're fairly large, expensive. I think the cheapest is 150,000. We are a fraction. We're looking at pricing it around $500. We're a fraction of that right now. These also require a logistical footprint that our product does not require. So I think they're different classes of products, but the fact that they exist shows that there is a market in mobile surgery.
How much are you cheaper than your competition? It's like 10% of
these
their
devices.
price?
These
Yes.
devices, these trucks would cost, I think the cheapest is around 150,000. Our product kit with the full kit that you can do 6 surgeries with would be under $5,000. So it's an order of magnitude
Got it.
difference.
And your gross margins? Net margins?
Reasonably good, around 50%.
Okay, very good.
But these will get better as we produce more product. We are just in the first few batches of sterile product manufacturers. So these will get better as we have economies of scale, improve our supply chains and so on.
Can you elaborate on the USP, the uniqueness of your product? Is it easy for other people to replicate? Because you're describing it as just a battery and
It is quite a bit more than that.
Right, so can you elaborate on that?
Let's see, where I had the slide here. Yeah, so we have patents filed in over 10 jurisdictions. We've had patents issued in major markets, Europe, China, Canada, and others. The patents, so the product is a computerized system. So it has a custom computer in there, designed by SurgiBox, with custom algorithms that have to be they have to be certified. It is very easy to make a product that will endanger patient safety. So we had to go through rounds and rounds of testing and design reviews that resulted in this very specific set of parameters that work. How to get there is complicated enough, but there is still the IP that covers the algorithm and the device itself. There is a lot of IP around the airflow, core usability features, sensors, future data analytics, and robotic surgery capabilities that we've filed patents for, and other core elements. And then finally, it took us years to build a product that's certifiable, and millions of dollars of investment. So it is not a simple thing to do overnight. The number of factories that can make this in the US, I can count them on one hand. Number of factories worldwide, maybe 10. It requires very specialized knowledge to be able to make something like this and pass the very strict medical certification requirements. So there's a lot of intellectual property and trade secrets that we don't patent, but there's also a lot in patents. We have 10 patent families which cover something like over 20 patent applications or more. Forget the exact number, but it's a lot of IP for the stage that we're in, actually. Something we invest a lot in.
And in terms of the markets that you're targeting, is it mostly US or
No,
worldwide?
actually, we were making good. We have actually one partner in Asia right now who's helping us with supply chains, and that partner would love to get us into the into market there. We are limited perhaps by the amount that we can spend per month on certifications. They are expensive and take a lot of effort. So we're taking a staged approach. We went to Europe first. That is because it's a very large market and with a uniform regulatory system. The Ukrainian government gave us a humanitarian use exemption, so we are there now as well. And we're planning to go to US and Asia later as we build up our manufacturing capability to have more volume. Since right now we're still fairly small shop.
You mentioned that the plastic cape is single use, and I understand why that's the case. What are there plans to try to recycle or reutilize that plastic in other settings afterwards?
Yeah, so your question is about this component. In terms of sterility and risks regarding reuse of such components that are in touch with the patient's fluids, there is a lot of risk for the company to do something that's reusable there. There have been a number of medical, and there is also the classification, the risk category for the product jumps up if you do something like that. So we went with a product that is known, which is the drape. as our nearest, the most similar thing that it's obviously a very novel product, but the most similar thing is the interface of a drape. And that gets burned together with waste anyway. So the same method of disposal. We did think of how wood is burned cleanly, and we did pick plastics and materials that would burn cleanly. They would not have, for example, PVC would not be the case. If you made out of PVC, which would be significantly cheaper, would not be safe to use.
And the blades in the model, that's what the drapes?
Yeah, this would be the single-use component. Yeah. This component lasts for hundreds of uses. We're looking at a warranty of 2 years right now, though we're planning to expand that as we go, as we spend more time into aging testing, things like that.
Is your product easily shippable? Because you
Yes.
mentioned there are very
It's a great
few
question.
manufacturing facilities that can do yours. So if you have to target, yep.
Yeah, the core problem would be this battery here that's lithium ion, and as you can see, it is UL and airworthy certified. And the airworthiness testing and the UL testing probably cost me, I don't know, $50,000 to $100,000 overall to get all of the required things in place. But it was a key certification because now we can ship it by air, and that was something we paid attention to close early on. Not all batteries can necessarily be shipped by air, and our battery is certified to be shipped by air.
Hi, Mike. Just question on one of the key things that your product is trying to provide is safer surgeries, right? And then
Yes.
Is your product attempting to replace the solution that the hospital or maybe the NGOs are currently using, or maybe as an additional option for them? That's one question. And then also in terms of safety, right? Do you have specific KPIs or metrics that you commit to your customers that your product can really deliver that? And then secondly, about the orders or the contract that you currently have with your customer, although I know you're in the early stage, are these pilot contracts or you expect that the way how you engage with these customers will be a repeat type of sort of bigger contract, but continue having new orders coming through?
Okay, I hope I got all your questions in my head. There are quite a few. To answer your question regarding the orders, we are expecting there'll be repeat orders. We are working, for example, with the NGOs. We're expecting to be listed in their catalog of devices that all of the members of the NGO can use. We are certifying this for general surgery use, which means you can use it in the hospital, you can use it outdoors. At least in Europe, that the regulatory process there allows us to certify as a CE mark class type product. So that is not an issue to use it outside or in the hospital. The product has been tested for use outdoors. The certifications are quite strict. We don't do the testing. I mean, we have certain requirements that we require our manufacturers to satisfy, but those are tested by third parties. So there's a minimum number of devices to achieve statistical significance, and the test is repeated a large number of times. And then the third-party tester, like in the case of the battery with UL, would provide a certification report that ensures that those requirements are met. And the list of tests, it's pages and pages long. I have an expert who does that for us. But you can be assured that the regulations are very strict. So that means it has to be third-party testing, and the testing had to be done.
Great,
so
thank you, Mike.
That
actually,
question.
that's actually all we have time for right now.
Okay.
Yeah, so thank you very much.
I didn't get to your last question. Sorry. Do you mind if I just give it 1 minute? Do you mind me the last question? Want to be...
Unfortunately, we're running a little bit over time
Okay.
right now, but I think you made your case very clear. So thank you very much for participating.
Thank you so much. I look forward to hearing your feedback. Thank you so much for your time and your questions. Have a nice rest of your day.
Thank you. So now we'll move on to our next startup pitching, which will be Grand Rise Technology Limited, which is building bio-based safe and smart coating for fruit shelf life extension. Are we ready to move on to the next one?
We eat fruits every day, but while we enjoy them, we miss what goes on beneath the surface. When fruits are harvested, their life declines due to respiration, water loss, and microbial growth. This may cause social problems such as fruit loss, resource wastage, and global hunger. Fruit appearance and shelf life are enhanced by using chemicals, but when they're excessively used, they may result in harmful, long-term effects on human health and the environment.
Here at Grand Rise Technology are developing a new solution to this problem.
Through recycling naturally biosafe materials, we invent fruit coatings.
Fruit coatings transform biopolymer into functional nanomaterials, creating a protective layer that keeps moisture inside, oxygen outside, and prevents germs growth.
Our innovative solution tackles the problem beneath the surface and extending food shelf life and reducing delivery waste, and make the world a greener and safer place. Okay, thank you very much. Let me share my PowerPoint. Can you see my PowerPoint?
Yes, we can.
Okay, good morning, judges. I'm Dr. Tenny Lam. I'm the CEO and co-founder of Grand Rise Technology. Our company is a university biotech startup, and we consist of chemistry professor and business doctor. We focus on bio-based safe and smart coating for food shelf life extension. The company has entered Forbes Asia 100 Watch list in September and also won the Environmental Impact Award by Alibaba Jumpstarter in May. Last year, we won the gold medal of Geneva Invention to recognize our technology. Okay. Our breakthrough and innovation is based on Professor Pauline Lee's 30 years more research experience on amphiphilic nanoparticles. This technology combines the water-based and oil-based material into one single nanoparticle, which is a technology breakthrough for bio-based material for coating applications. We want to leverage this technology to solve social problems on food loss, wastage, and delivery risk. Nowadays, because of the COVID-19 pandemic and also war, many people are suffering from hunger. And at the same time, that more than 40% of fruits and vegetables produced in tropical market country is lost in the post-harvest stage. That's been wastage of water, land, energy, and other natural resources. At the same time that we see COVID-19 or virus can be spread over the food supply chain. Traditional approach to extend the food shelf life are using chemical material, such as morphinite. Excessive use of this material will be harmful to human body and also harmful to the environment as well. So in view of this, scientists are developing greener and safer solutions to address this problem. So bio-based material, edible coating are the key directions. Two benchmark companies, one of them is Appeal Sciences, that headquartered in US using lipids, that they already have $2 billion US valuation. The other one, which is Bill Gates' investor company called Mori, they're using protein to address this problem and already in the B round funding series. Our technology is more advanced, that based on polysaccharides. That means that with this edible coating, that we can slow down the respiration rate of fish, and at the same time, and at the same time that we can also reduce the water loss rate. That means more freshness, and moreover, that this technology has antimicrobial molecules. That means we can reduce of microorganism growth over the surfaces of foods. That can be proved by this diagram. And that if you look at the small strawberry, that without coating our edible coating, the mold starting to appear after 3 days. At the same time, that you look at the vegetable, that the water loss rate has been reduced by half over 10 days with this coating. Okay. The food harvest treatment market is $2.3 billion US size, and the TAM market in China is talking about $1 billion US. China and Asia region are the larger region on the food import and export area. However, we do not see any unicorns in this industry. The solution can also address the industry ping pong, or especially in China, let's say they have many circular links, circular chains, and also less than 10% of foods are treated versus Western world that we have 40%. That means high return rate and food wastage rate. Okay. So last but not least, let me summarize my presentation. We have proven to transform the university technology into several products in a very short time frame. Secondly, we have attracted famous investor, incubator, and customer in this region. Last but not least, finally, our technology has high entry barrier, and that have been recognized, which is ESG and also circular economy concept, and that has been recognized by many awards. Okay, thank you very much.
Thank you, Dr. Lam. Now we'll move on to judges' Q&A. Judges, you may begin.
Are you working with any customers now, and you have any traction?
Okay, yes. If you look at our the middle side, that you see there is a Korean giant food company, and actually we're working with 4 pilot customers at this stage. And this is our second product. That the first product that we produce is antimicrobial coating, which already commercialized in market. You can buy it in Hong Kong as well. This second product is already went through the 0 to 1 state, meaning that we already solved the formulation. Right now we are in the commercialized pilot, where 4 customers at this stage is going to test the product. And one of them is Korean food. Secondly, that we have 2 in China, 1 in Thailand, mainly in food and also vegetable.
So what are the challenges that you found in commercializing the product?
I guess there are 2 things. One of them is actually there's some traditional approach that using chemicals. So that's why we may, for those medium range and more, I would say, medium range and lower range kind of customer, we need to educate them, let them know this is more greener, more ESG solution. However, for the more high-end customer, which is because we see a lot of the food industry is in the consolidation. There are many large food supply chain giants. They know this is a good solution. However, they need more scientific data to test. So that's why I can see number 1 challenge is that we need to educate to the market. Secondly, that we need to identify some key famous pilot customer at this stage. So that's why we're working with 4 major customers in order to make it success.
Hi, Tenny. Question. You have this data about only 10% of the fresh produce is processed, right? Or with protection, and then versus 40% outside of China. So what's the reason, and also would that limit your opportunities in growing the China market?
Oh yeah, thank you very much for this question. Actually, this is the reality in China right now. But however, we can also, number 1, we have seen the market is in the consolidation stage. You see many large giants like Alibaba, Meituan, and Baiguoyuan, that they are doing consolidation. They are buying some upstream customer like farms, and they found out that actually they're more advanced solution to improve the logistic chain effectiveness. So and also with that, they can learn from the other region as well, like Western world. So that's why number 1, I see the under penetration of this solution. That's number 1. Number 2 is that we also believe majority the reason why then not many farms using this protection approach is because usually the food produced in China are quite low end. So and we see that some high value, high end foods like strawberry, like some durian and some cherry, some of them are import from overseas. So that's why we believe that as the food industry in China, they're moving to a more higher, I would say higher value, more expensive food. They will looking at this solution soon. I don't know, is it address your answer?
Thank you.
You mentioned that the company originated out of the university. Has that been spun out? And you mentioned the other antimicrobial solution coating. And I see there's a reference to Cotex, which is the company.
Mm-hmm.
So are those two different companies? Are these two different brands of the same company? Will an investor that invest in the microbial coating also be investing in the fruit coating business?
Oh, okay. Number one, our company had history is actually already 3 years. Yesterday was our anniversary of 3 years. During the first 2 years, originally we want to do food coating. I mean the food protection extension, food shelf life extension. However, that since we faced COVID-19 in 2020, and based on the same technology, actually we can it's much more easier that we produce the first bio-based antimicrobial coating that's to address the COVID-19 market. So that's why we have slowed down a bit in the early stage. And as I said, that this product already in commercialized stage, you can buy it from good mass, from internet, from website as well. Some of the key customer already in Hong Kong as well. And actually, so since this product already go into commercialized, and now we're based on the similar technology but different material. As I said, our core technology is not just the application, but the platform. The platform is nano core shell particles technology, which can combine water-based and oil-based material into one single nanoparticle. This material can be eatable material, can be another type of material. So that's why, number one, we're based on the same technology, similar technology, but in different application. So go back to your question that this is the same company. We have two product lines at this moment. One of them already in commercialized state, already selling. The other product line, which is more sustainable, more long-term business development, that will be food shelf life extension applications. I don't know whether it address your question.
It does. And it makes sense that it's based on the same technology. I would think certain investors may be more interested in investing in one vertical versus the other. Something to keep in mind.
Oh, you are right. Actually, we are in the PA round closing stage, and the new funding actually, including you see the Korean giant food that in my slide. Actually, all of these resources will be focused on the food shelf life extension area, which is more ESG approach because we are recycling some seafood wastage and vegetable wastage to produce the antimicrobial coating. I'm sorry, the shelf life extension coating. You're right. Actually, resources will move to the food shelf life extension applications.
So I'm a little bit confused. So you have two different products. Actually, I was also going to ask about the shelf life product because I thought that might be a bit more interesting. So how are you guys kind of focusing your resources right now? Because you spend your time talking about the other product rather than the shelf life product. So I'm getting a bit confused here.
Okay, sorry for the confusion. Since our company core is doing new material development, we are R&D and production company, material production company. So that's why we need to leverage our reseller, our sales network to do this. So go back to the first product, which is already commercialized, that actually we're working with some retailer and distributor that they're already helping us to expand the market. So that's why the whole team, more than 80% of the resources right now are focusing on the food shelf life extension application development. For example, like we have signed two strategic agreement with a Hong Kong local retailer, and the other which is with a Hong Kong properties and management market leaders, so that they are helping us to promote the product. So we only, right now, for the first product, we only need to focus on the manufacturing part. And so that's why the R&D team will not need to put a lot of resources on this kind of selling, commercialized selling activities, more focusing on the food shelf life extension application now.
is the coding actually safe? It's proven to be safe, right? It could be consumed by
definitely.
humans.
Yeah, right. And there are two major I would say standard or the safety policy that we need to comply on. Number one, the all material for this food shelf-like extension, which is edible, so that's why the whole material list is under the FDA approved material list. Secondly, that there is a safety rule for the additive to food in China, and so basically number one, all the material are based on the approved material list to do the formulation. That's number one. Number two, that the production process will be under a GMP food grade production environment. One more thing is that actually my family business is doing coating manufacturing. So that's why there's no production capacity issue from us.
Just one quick question, if that's okay. Just on the competition, you did mention about there are two other companies, but so do you feel whether any differentiation or maybe the market is big enough for multiple players?
Okay, number one, actually this is a quite new market, so meaning that we have disrupted the traditional approach from chemical material focus to more edible safety material, and these two companies that is more like right now is more technology focused. They're using lipids and proteins, which is oil-based material. That means that may not be easier to washable. Although it is safety to eat, it's safe to eat, but it's not easier to washable. As I mentioned, that our material is based on cold-shell nanoparticle, which combine water-based and oil-based material. That means the seafood material, which is the raw material is based on seafood or mushroom wastage, extract from them. That can be water-based type, meaning that they can be easier to washable. That's number one differentiation. Secondly, that the previous material, they do not have antimicrobial properties. And we are using natural material that like chitosan. Chitosan, they are naturally antimicrobial agent. That means they can kill virus and also bacteria. So that meaning that in theory, that should have more than 30%, 1/3 of the effectiveness compared with the previous the competitors.
Great, thank you very much, Dr. Lam. That's all we have time for this morning, but thank you
very
much for participating.
Okay, thank you very much. Have a good day. Bye-bye.
Now I'd like to welcome our next startup pitching today this morning is FQX, the lending infrastructure for Web3.
Hi, I'm Benjamin Travis. I'm the Chief Business Development Officer of FQX. FQX is the company behind the trademark eNotes, the blockchain-based debt securities. We were founded in 2019 by legal experts, including tokenization, legal specialists, blockchain entrepreneurs, as well as capital markets lawyers. We combine this legal expertise with technical expertise from the leading blockchain engineers, as well as RegTech experience, and a network of investors from traditional banking and asset management, as you can see on the slide. Our vision is that the future financial system will be tokenized and that FQX will enable secure, direct, regulated, as well as accessible debt securities. So we see that traditional and decentralized finance both have huge benefits, but also substantial flaws, and that by combining the best of both worlds, we can make capital markets more efficient. So how do we achieve that? After years of research on the most updated and efficient legal frameworks, we now have a blockchain-based security that can be issued in a fully digital native environment, but can be enforced in local courts in over 169 countries. So this regulated debt security and enforcement mechanism provides for additional security for the investors. Investors in return would require less credit mitigants, such as collateral, making loans more capital efficient and truly decentralized. The high speed to market substantially reduce the time and the cost of debt issuance for a short-term bond program. You can see on the screen our e-note being displayed. It's extremely simple and clean, and these are the on-chain data stored on a public DLT through a token representing a smart contract. We are starting with Solana, which is one of the most efficient and cost-effective public blockchain, and we'll then expand to other public DLT to support the issuance of our e-notes. What is the competitive landscape that we are facing? So in decentralized finance, the most widespread model is to use pool-based lending, but which exhibits a high regulatory risk and lack of clarity on the counterparties and limit access for institutional investors. It's easy to use, but it exhibits higher risk, especially regarding the enforcement in real life. So with our blockchain-based debt security displaying the ISIN, we can better match the requirements of institutional investors and offer an enforceable debt instrument. Sorry. So what has been our traction and the pipeline to date? So in 2021, we validated our product with traditional companies and institutional investors such as Credit Suisse. In the first half of 2022, we started to scale volume with large digital asset companies such as Ember or the Algorand Foundation. And in the second half of this year, we are now strengthening our partnerships in order to further scale volumes to higher numbers. The opportunity is huge. So if we look at short-term loan market of about $1 trillion based on our latest estimates, or the short-term bonds market, which is 10 trillion, there is a huge volume of about $10 trillion that could be optimized with the use of a blockchain-based instrument such as the e-notes. So with that, I would like to thank you for your attention, and I'm of course available now for any of your questions regarding our company.
Can I just ask, the blockchain DeFi space is quite crowded. Lots of people trying to take a piece of that. So how are you, what's your barriers to entry? What are your uniqueness, please?
Yeah, sure. I mean, I'll probably focus more on the competitive landscape, and I think it is, there are many players in the market. I think our USP is really first on having scouted the legal framework, so having actually an instrument that's enforceable in real courts, and we use arbitration mechanisms. So really the combination of legal and tech, which is very hard to replicate. I think the tech itself is not, there is a lot of, that's not the high barrier to entry, but the combination of the legal and the tech expertise makes it very unique. So that's really where we differentiate ourselves.
I was going to ask about that legal framework. I think you said it's accepted in 169 jurisdictions. Can you just elaborate a bit more on that?
Yeah, sure. So we looked at globally all the legal frameworks that support the issuance of a short-term bond. So we started with actually the digital promissory note as the underlying building block for our short-term bond. And at the time that was supported in Delaware, and then later on expanded to other jurisdictions such as Singapore. So now we have a modular infrastructure where the issuer and the investor can choose which legal framework they would like to issue on. Would that be under Singapore law, under Delaware law? We also have Swiss DLT law and the new German law. So we continue to research which legal framework supports the issuance of the document. And one of the legal innovation was to combine that with an enforcement mechanism through arbitration. So we look at the most efficient arbitration centers, and we started with Singapore and Switzerland. So again, you can choose that modularly. And then because you have an enforcement through arbitration, you can access the New York Convention for Arbitral Awards, which has been ratified by 169 countries. So that means that once the arbiter has issued a statement or the award, you can enforce it in the jurisdiction of the issuer without going through a detailed local court process. So that's why you have a standardized enforcement mechanism globally.
What is your charging model? How do you charge your clients? Is it by transaction, or you charge annual fee, or any comments on that?
We do charge transaction fees, so it's a success-based model basically. So an issuer can go and propose an issuance program. Investor can then submit their commitment, and then the program is then issued. And once the program is issued, we charge a fee to the issuer, which ranges. I mean, here we have a 10 to 25 bips model. That's because we cater for quite different types of issuer, being digital asset companies or traditional issuer, such as medium-sized enterprise. So our revenue model depends on the volumes being issued and the success of transactions for investors.
How are your volumes tracking right now? Is it growing fast?
So last year, when we launched the product, we reached $1 million. So it's rather small. This year, we already expanded by 20 times. So we're at $20 million. And we're still expanding on the product suite to further enhance scaling and new partnerships.
How much money do you save for your clients when they use your service?
Yeah, so I think we're really network driven. So the more users and investors we have on our infrastructure, the highest the savings will be, and the more competitive this will become. For sure, we already save substantially on transaction fees. So I think I mentioned that it's about 90% saving on the issuance fee. So when you look at our 25 bips issuance fees, that's an all-in cost, including all the legal documentation, etc. If you compare that with a kind of commercial paper, that's at least 75 to 100 basis points for the first issuance, and that's even for traditional companies. Digital asset companies will have even higher fees. So you save significantly on the issuance fees, and then on the required yields or APY. At the moment, we're in line with kind of the market. I think where we save is there is less collateral to be posted, so the loans are more capital efficient. So that's at least at the moment 50 to 75% less collateral being requested for a similar amount of yield, thanks to the enforceable nature of the instrument.
Sorry, just also the benefits that you bring to your client. What about credit risks You talked about risks and one of the key advantages.
Oh, yes. Thanks for asking that. So I think we are very clear about what we stand for. So the legal enforceable instrument that we help to issue, but we don't do credit risk analysis. That being said, we have different partnerships. One of them is with Credora, which provides on-chain rating. So if an investor requests for rating, they can do this thanks to our integration with Credora. And we have also done in the past credit opinions on our issuer with a partnership with Moody's Analytics. So they provide within 1 or 2 days a credit opinion on the issuer. So that supports the credit assessments of the investors. To add, we also do AML sanction checks and KYCs at the onboarding of both issuers and investors, so to create a whitelisted, safe environment for all parties.
And so you're doing the AML KYC yourself, or you're working with a partner for that part?
Yeah, we're working with a partner to help with the efficient AML KYC onboarding process.
So are there any challenges or problems that you run into? I mean, can you talk about the top 2 complaints by your clients or things that are going wrong? Thanks.
Yeah. So the biggest challenge is to increase the liquidity available on the infrastructure. I think to convince institutional investors to try a new legal instrument, a new way of doing things, new infrastructure, that takes time, and of course traction and track records help to do that. I think initially our idea was really to bridge institutional investors with digital assets, and I think we had good traction at the end of last year, beginning of this year. I think with the crypto winter starting from May, this thesis has become more challenging, and we had some of the issuers going through difficulties. So the likes of Babel Finance or 3 Arrows Capital had issued some e-notes, and they went through difficulties. But so that's the challenge. But I think through those challenges, we also proved the resilience of the instrument, because our investors actually recovered their capital with our instrument, because I think so we proved the enforcement mechanism and also the indirect halo effect of having an enforceable debt security by having issuers willing to repay this instrument first, because they don't want to go through court, and they know with this instrument they will be going through court, whereas other DeFi instrument that may not be the case. So I think we also proved a good track record in this difficult year.
So they don't want to go to arbitration, not court, right? But
yeah, arbitration.
Right,
yes,
right.
sorry.
So that situation, they did enforce a note, or you just, because of the strong positioning that you could enforce this in arbitration, they settled?
Yes, they settled, and so the investor could recover their money. We didn't have to. They agreed with the issuer not to go through arbitration and settle ahead of time.
Great, thank you, Benjamin. That's all we have time for this morning. So thank you very much for participating.
Thank you. Thank for your question. That was wonderful.
Now we will move on to our 6th and last startup pitching this morning. It will be Matchmo, the online home loan marketplace for the Philippines. And don't forget to stay after the pitches, because we will again be commencing I'll be moderating a panel with our VC judges who have participated in the semifinals this time around, and we'll be discussing what trends or insights that they saw across all 23 startups that have pitched as part of the ATEC semifinals this year.
right. Good morning, everyone. Thank you for allowing me to share our platform today. My name is Kevin Carion, and I'm the CEO and founder of Matchmo. So I'd like to share with you, on a global scale, the value of the real estate loan market is at $7.9 trillion. And with the annual growth rate of 11.3%, it should triple by 2030. So this is just too big of a problem for us to not notice. We started in the Philippines particularly because there's a huge backlog in housing, 6.5 million in housing backlog. This is number of units. It's because of the slow processes and restrictions created by the banks and just the whole system, basically. And because of the slow process, it could grow to as much as 22 million by 2040. So we've identified problems being faced by home buyers and real estate developers that we wanted to tackle. As a home buyer myself, it would take me an average of 120 days to have my loans processed. And there's even no guarantee that I'm going to the right lender. And we've noticed that about 30% of home buyers fail to get a loan. And even if you're part of the lucky 70% who is able to get a loan, you could end up paying more because there's no transparency in terms of them offering the right rates to you. And banks are still stuck with the anachronistic process of doing things manually, and it's still very complicated. If you wanted to apply for a loan, you had to physically go to a bank or any lender to get your loan processed. Coming from a family of real estate developers, each month of delay is just too costly for us. It costs us about 2 to 3% per month on cost of capital alone for each month of delay. It's because property developers don't have the capacity to pre-qualify home buyers. Plus, we are limited to local buyers because international investors tend to shy away from buying properties locally. It's because these investors can't use properties here as collateral to leverage against. On the flip side, as I mentioned, about 30% of home buyers fail. And from the developer's perspective, 60 to 70% of their inventory actually gets converted. So how do I mean by this? Imagine having to build 1,000 houses and end up 300 houses being unoccupied. It's because home buyers find it so difficult to get access to the right financial institutions. That's why we wanted to create a fast, accurate, and reliable solution for home buyers, property developers, and investors for them to use. That's why we created Matchmo or Match Mortgage. Matchmo is an online platform where we easily match the home buyer's profile with the right lender. We're giving home buyers the power to choose the right mortgage for them. We want to democratize housing loans with our one-stop platform for borrowers to access and lenders to offer their products. We've created our proprietary algorithm wherein we profile each buyer based on their age, their income ratio, their place of work, many more criteria being looked in by the bank. So these particular criteria make it faster and easier for us to match them with the right lender. And immediately, once we've matched them, we find, in as fast as a few seconds, we find a match for that particular buyer. And we offer transparency because we offer the latest rates available, best suited for them. We are creating a centralized platform for home buyers, real estate developers, and international investors where they could meet through our platform, where they could meet banks, lenders, and other financial institutions, where they could leverage against properties that they have and they are looking to purchase. To put it simply, we are democratizing home loans. Our history, with just 1 year of processing, we've helped the average consumer save up to more than 2% per month on interest expense. Because of the high interest expense, this is a huge saving for an average household. Can you imagine saving $100 a month on interest expense with an average family income of $800 for a loan of $50,000? That's practically a week's worth of groceries put back on the table. And we are helping home buyers do that exactly. And because of the value that we bring, we have already partnered up with some of the largest property developers in the country, and they've entrusted us to assist their home buyers in getting the right housing loan. We have the widest network of partner lenders in the Philippines with over 22 lenders and growing. All this with just a little over a year of operation. So our team is composed of myself, myself, Kevin Carrion, our CTO, Rain Duque, and our COO, Tani Gonzalez. I've come from a real estate background, and I was an ex-banker myself. Everyone in our team are all entrepreneurs in our own little way, and we've come together to create this platform. This is Matchmo, your online mortgage platform. We're creating cross-border real estate financing solution for buyers and investors. Thank you so much.
Great, thank you, Kevin.
Thank you.
Can I just ask, I thought the bottleneck is on these mortgages approval are usually on the bank side. If you are a matching platform, are you really solving the problem?
Yes, particularly. So banks have very specific criteria wherein they look at age as an example. So we match them particularly with that particular bank. So beyond that, banks also look at credit. But for us, we look into to the personal profile of the buyer themselves.
Can I ask, your solution also is trying to shorten the amount of time, right, for the buyer to get the loan. That's when you talk about the backlog, and also the success rate in getting the loans. So using a solution, did you manage to also improve in those two aspects?
Yes, exactly. So we've cut down processing time from 4 months down to 2 to 3 weeks. We've created a centralized platform. So instead of home buyers having to go to multiple banks, having to fill up multiple application forms, they could fill up our single online application form on our platform, and we send them out to our partner lenders. The way we were able to help solve problems for these particular developers is that we were able to shorten loan processing time, which in turn speeds up collection period for them. If we speed up collection period for these particular property developers, then they're able to start constructing their next batches of houses, condominiums. So it's just very beneficial to the whole industry.
Just a follow-on question is, in terms of the barrier to entry, could you talk about how other startup or company could replicate what you're doing and then essentially offering similar solution in the market?
I think it is possible for other competitors to come in the market, but particularly what we've done is create that data, particularly the data that I've used is something that I've gotten for over 10 years within the industry, within banking and real estate, particularly here in the Philippines. So we've heard of competitors coming in, but we feel strongly in terms of our algorithm, in terms of matching. That's why we feel strongly that we still offer the fastest way of loan processing within our sector.
Can you talk a little bit about the competitive landscape? Who are your competitions? And I would also like to follow on the other panel judge's question. How are you different in terms of, say, those companies that matches people wanting to apply for credit cards, for example? There are quite a few similar types of propositions out there.
Right. So in terms of our competitors, we currently, I believe we are the only local players here within our market that's offering particularly real estate loan products. In terms of other competitors such as credit card offerings, there are some, but they do direct. It's really like a funnel for these particular lenders, banks, financial institutions, where they could get leads of potential credit card holders within their system. But for us, we, in a way, we've automated some of the process, but there still remains to be some sort of manual processing wherein we handhold the customers in terms of guiding them through the step-by-step process. It's because you have to understand this is very different from applying with a simple credit card. The terms being involved here, the value being involved here is a lot more. So banks are more particular in terms of approving. They don't approve so easily. So that's why it still takes them 2 to 3 weeks. But in fact, we have proven that we are able to get loans approved in as fast as 2 to 3 days. So I think that is the key difference in terms of credit card and what we offer in terms of real estate financing solutions.
How are your volumes tracking? Are they growing fast?
They are growing fast, that's correct. So far, we've processed about $100 million worth of loans with just a little over a year of operation. We get a substantial volume. All in all, with the partner developers that we have partnered up with, we have so much more within our pipeline. If we were to consolidate them all, they could account for about $20 billion worth of loans that needs to be processed on an annual basis.
And what's your charging model? Do you take a percentage of the
Yes.
loan process? Okay.
So we offer this service for free from the perspective of the home buyers and the property developers. So what we do, we get a commission incentive from any of our partner lenders.
And beyond Philippines, you have any plan to go beyond your local market?
Yes, exactly. What we wanted to do is enforce real estate cross-border financing for buyers and investors. So we wanted to expand within Southeast Asia and then eventually to the whole of Asia Pacific.
And how much do you? Oh, sorry. And how much do you save for the lenders in terms of their costs by using your service?
So the thing with the system right now is home buyers or borrowers would go directly to the lenders and they would have to manually profile each of the home buyers. So we've sped up loan processing for them. Basically, the types of clients that we send out to our lenders have been filtered already. So it takes them faster in terms of identifying the right buyer. So they save a lot of time because in reality, if we were to look at the average lender, they get about out of every 100 clients, only about 10 to 15% actually pushes through because they get a lot of false clients. I mean, clients who simply do not fit the criteria that they're looking for. So we help out in terms of speeding up, identifying the right borrowers for them. So beyond this, we are looking to expand our services in terms of offering insurance products as well to these borrowers because we were able to identify that they usually are at a loss because they have loans. They are required to get loan products themselves, and an even bigger market for an even bigger opportunity for us is to offer some sort of bridge financing for particular buyers because of the strict banking regulations. Not all lenders, even if they are in a way credit worthy because of the strict banking regulations, banks or lenders, particularly local lenders, are unable to offer them loan services, loan products.
So you don't take any risk right now on the loans at all? There's no liabilities that you have if there's a default?
No, none at all.
And are you close to profitability yet? Sounds like you should be, right?
We should be. However, there is some delay in terms of collecting. We get paid once the loan is taken out. So it takes time for us to build up. Our objective currently for the past 12 months is to grow, is to scale our team, get as much property developers within our platform to use our services for us to increase our other possible competitors' barriers to entry. once we've gotten most of the largest developers here in the country. So by first quarter of 2023, hopefully we would have gotten about 60, 70%, 6 or 7 out of the 10 top real estate developers within the Philippines.
Great, thank you very much, Kevin. That's all we have time for this morning, but thank you very much for participating.
Thank you so much.
Thank you. And that brings us to the end of the startup pitches this morning. Let's give a big hand, actually, for all 6 startups who pitched this morning. And now basically comes the exciting part. I would like to thank once again our esteemed judging panel here of Anna Cheung, Thomas Cho, Gabriel Lee, and Irene Chu. They will now be conferring with each other to select 2 out of the 6 startups that pitched this morning to be passed through to our finals, leaving the final spot available for you, the audience, to vote. So once they've made their selection, we'll know which of the 4 remaining startups are left for you to vote on, and we will be making a voting survey available via a QR code that I will put up on the screen shortly. But first, we will let the judges go confer. And in the meantime, it's my great pleasure now, actually, to move on to our next segment, which will be a panel of our semifinal judges who actually reviewed all 23 of the startups that participated in the semifinals this year. And it just goes to show how deep our judging panel is, that we actually have no overlap between the judges today and the judges who are participated in the semifinals. So I'd like to introduce and bring up to the stage our judging panel for today. We have Xing Chen, Private Equity and M&A Special Counsel for Baker McKenzie. We have Gautam Chowcharia, Deputy Head of APAC Research for UBS. We have Bosun Hao, Managing Director of Taiwan Capital Management. Maureen Ho. Good, you can take a seat. Maureen Ho, Private Equity and M&A Partner for Morrison Foerster. Alice So, Head of Entrepreneurship for Cyberport. Actually, do you mind? I'll sit here, actually. No, we'll shift down. It'll be easier this way. Yeah. And we have Anthony Wu, Director of Ventures for CMA CGM. Go ahead, Anthony. So thank you, everyone, once again, for participating and for supporting ATEC. You guys actually, I think everyone had a chance this morning to get a sample of what you all had to do over the last 2 weeks, which is review all 23 startups. We only went through 6 today. You guys, quite a few of them actually have gone through all 23. So thank you very much for your stamina and endurance and your attention. I think for today, I'd like a chance to maybe just go through some of the themes and the insights that we saw across the 23 startups. And maybe a way to split it up is to do it in kind of 3 separate segments. Like the first being sort of fintech and maybe emerging markets. The second being kind of the healthcare medical side of things. And lastly, we saw quite a few startups this year on the sustainability angle, right? Sustainability and deep tech. So perhaps maybe we could, and what I'll do is they will give me a signal as to when our judges have actually decided the final 2. So we might interrupt like the flow of the conversation just to throw up the ability to kind of vote on the remaining 4 for the audience selection. But today, let's start with the fintech and emerging markets piece. So we had 5 fintech startups participate this year: Finverse Technologies, FQX, which just pitched this morning again, Turing Certs, Whispresso, and Fano Labs, which also we saw earlier today. And also on the emerging market side, we had companies sort like Chide Logistics and Matchmo and Gandan. These seem to be interesting startup divide between the startups in the fintech universe, between the ones that were serving emerging markets and had sort of models that best suited those, essentially targeting underserved, underbanked, underpenetrated addressable markets. And then companies which seem to target more developed markets, and their focus was a lot more on efficiency, enhancing efficiency, lowering cost, perhaps the implementation of new technologies like blockchain. For the startups that you have had a chance to kind of review, which ones to you appear to have the most compelling addressable market opportunity? And perhaps Gautam, would you mind starting with you?
Yep, sure. I'd highlight FQX. And why I say compelling, we are seeing technology evolving or even revolution in the crypto world. And we have the traditional financial services, the legacy financial services world. And as we know, the financial services is highly regulated, and we still haven't seen enough of regulatory support or even encouragement of the crypto world globally. It's still evolving. So FQX, I think, is unique because it bridges the gap between the two worlds. So it's bringing in the old financial services product, but marrying that with technology from the crypto or blockchain world to make it more efficient and more democratic. So it expands market, gives the market the legacy regulatory protection, and makes it much more efficient.
Well, I'd like to add a bit. Actually agree. I think the most impressive one among all those fintech companies is also FQX. The point that just addressed, I mean, financial services has been a very heavily regulated industry in the history. And I mean, the combination, intersection of financial services together with crypto technology is also adding a layer of regulatory challenges. So I think the idea of that candidate FQX, that they're actually thinking ahead and kind of preempt some of the challenges that the industry is fronting. They sort of build up their solutions based on feasible legal structure and patent. Interestingly, they started their products in two jurisdictions. One is Delaware, it's the US, and the other is Singapore. Those two jurisdictions, from legal perspective, is actually very interesting. Those are on the kind of two ends of the spectrum of regulation, because Singaporean regulators, they have a one uniform regulator on crypto and digital products, while US is like a jungle, because it's more like multi-regulator and multi-states, a multi-layer of regulations. So the regime is quite different. But they managed to, kind of navigate through two jurisdictions in the same issue. I think that's kind of creative and innovative. So I think the candidates themselves introduced, technology-wise, the difference could be quite marginal, because I think it's quite difficult to increase the technology or efficiency a bit. But at the same time, if they can kind of change the angle and cut into this edge from a different perspective, for example, they kind of preempt the regulation challenges and resolve issues from that perspective, the increase and competitiveness could be increased, I'd say, exponentially. So that's one of the observation.
Great. Does anyone want to speak to some of the emerging markets, I guess, investment theses that we saw? Once again, we had some companies like Gandan, for example, which served the underserved market for student loans. They made their pitch around the idea that essentially, I think the number was there's only kind of a 7% penetration, right? So even though that they were small, the market opportunity seemed huge, right? And then you had other companies like Chite Logistics in Pakistan, and then also Matchmo in the Philippines. What's interesting about this year's crop is we certainly got startups that came from further afield and into kind of these markets. So it's interesting to see, the types of questions the judges panel had, the depth of understanding of those particular markets, and how well those companies actually articulated what their problem set was. I mean, were any of you kind of attracted, or maybe less so, by the market opportunity there?
So I think the market opportunity is there, specifically when the market are not being tapped So if you're able to bring technology and ideas to solve that, the size of the market is there. So all the names you mentioned, from Cheetah to Matchmo to Gyandhan, these are real solutions for real demand in the market. Absolutely.
I guess I would add that, for these emerging markets, it's very important for, the management to be acquaintance and know the locality really well. A lot of these emerging market, as coupling technologies that we have seen in other more developed market, but the key to the success is really what kind of verification they could do. For example, in terms of Pakistan, in terms of Philippines, like how do they verify, the information or the credibilities of the counterparty? And ultimately, whether they succeed or not, it also depends on how quickly they could build up the high entry barrier and also make sure that they keep up with the regulatory approval as they expand it into other markets, for example, which Matchmo was saying, like they want to expand into insurance product, they want to expand into other Asian market, how well they are going to learn and pick up the other regulations in other jurisdictions and therefore succeed in those markets as well. I think those are very important. So I think it's a long way to go for the emerging market candidate, but I could no doubt deny that they've already got very good traction locally, and it's probably the reason why they were amongst 23 in front of us.
I do like how Cheetah talked about gamification in the solution. I think it's creative, and I also do like how, let's say, Final Labs, they're sort of localizing NLP for different Asian languages, right? So and I think that's essential because right now I think in a lot of NLP applications and research, it's mostly focused on English. I do have to say that there are all these inherent risks, right? So let's say for Final Labs, for NLP, it has been around for like a couple of years. NLP has been popularized since 2016. We now have all these things called, has this thing called the GPT-3, or coming up with the GPT-4, which is the latest NLP solution derived by or being conducted research on by OpenAI, I think. So there are all these risks involved in extending your research and capabilities across different technologies. But I do think that in terms of us meaning ATEC, the focus on Asia, a lot of these startups are pretty promising because they are applying cutting edge technologies and creative ideas to creative solutions.
Yeah, that's a good point, actually. Maybe that's something worth dwelling upon right now, actually, just on the technology side of things, right? Were you, as a panel, impressed by the level of technology that's being employed by these startups? Like, how progressed do you think they were for their respective industries? And do you think it's ready and capable to supplant the existing processes at, for example, the financial institutions? It seemed that a lot of at least the fintech companies were trying to challenge. And, I'd also like to invite Alice So, who's the head of entrepreneurship at Cyberport. Cyberport also obviously has a deep bench of portfolio companies also in the fintech space. So it'd be very interesting to hear your opinion on what you think the state of technology is right now for startups in this region.
Thank you. Yeah, sure. I think one of the biggest group of the companies, especially in Cyberport, is the fintech. Yeah, we have as a whole over 400 companies, startups, as a whole. Yeah, so out of the total 600 in Hong Kong. And I see they actually is quite, on the technology side, need to be, sophisticated and need to have a lot of the, know-how, especially in the industry field. Yeah, because most of the founders and the top management in the startups, they come from the seasoned institution in the finance field, because they know the industry, and then combining with the technology, especially some proven technology like AI, blockchain in the market, they can have a very good application in that industry because they already have the good domain knowledge, recognizing the pain point, but still facing a lot of challenges, because they need to finally collaborating with the big banks, institutions, maybe need to have some kind of the disruptive, but actually, in my point of view, should be complementing. Yeah, because not replacing, but complementing, how to improve the efficiency or that, solving the pain points in the financial institutions. So technology definitely important, but together with the industry know-how, especially in the finance field, that should be additional credit, to those founders already get that advantages. So that's the combination,
Great, and actually maybe we could drill down a little bit just in terms of, say, blockchain technology. Both Gautam and Xingxing had mentioned FQX, which is obviously trying to promote digital lending based on the blockchain, crypto-enabled lending. We also had a company called Turing Certs, which was using blockchain to unify identity and prevent, fraud. What's your sense now? We've had blockchain companies participate before in the past in the ATEC startup competition over the last few years. And each year it feels that the companies themselves are pitching less on the basis of the novelty of their idea on the blockchain and more comprising kind of a more holistic sort of business model. Do you think that the state of blockchain technology is at the stage right now where it is stable enough, reliable enough, safe enough from a data security standpoint to actually start being implemented in large financial institutions or for direct consumers yourself? And quite a few of them are from large financial institutions, so you can opine on that as well.
Look, I won't answer in a binary way, yes and no. They are definitely evolving, much ahead than 2 years, 3 years back, both underlying technology as well as efficiency. Now, our financial institutions like ours, they continue to be very heavily involved in that and started to use in many applications. The key is ultimately whether they scale up at a global or at a regional level. And then the real test happens about all the parameters, whether they're really stable, whether they're really secure. But the thing is, last 3 years, their applications and the size and scale is much bigger, and they remain stable and secure. We haven't really seen any big mishaps or big issues around that. So it still looks quite optimistic, but the real test will happen when they achieve global or regional scale in any product or any service.
Well, just a follow-up question on that. From a large financial institution perspective, do you feel like the education level is there for what essentially will be the buyers of particular services that are being sold here? So it goes to the question, if you're running a company, what's your sales cycle kind of look like when you're selling into these large financial institutions? Do you feel that the depth of knowledge from a technical perspective is there now that they can evaluate the merits of like these new propositions on the face of it in such a way that makes the startups who are actually building their business around it able to kind of navigate it in a practical sense?
So at the retail level, retail individual consumer level, possibly not yet. At an institutional level, the education level is very high compared to 3 years back. But again, at an institutional level, you do need to work within the ambit of regulations. So there the key is not education, but where the regulatory support is there or not, because that's still a gray zone in many products and many markets. At the retail level, I think will still take time.
And then finally, we, from a business model perspective, we saw quite a few businesses that are pursuing strategies, actually, even at this early stage, that are targeting a regional play. Not even just a particular company, not a particular country or geography, but actually a regional play itself. For example, Finverse Technologies, I think it was looking to be an open banking API, similar to a Plaid in the US, but for Asia. From a regulatory perspective, how easy is that to develop? Do you see a convergence of regulatory regimes across Asia that actually makes this sort of regional strategy a lot more practical?
I mean, from a regulatory perspective, right, every jurisdictions are now imposing sort of more sophisticated scrutiny on how these technologies are being deployed. And I think, during the quarterfinal or pre-semifinals rounds, we did ask a lot of questions about how do they catch up with the ever-changing environment, whether it's in China or whether it's in other parts of the world. How do they actually keep up with the technology? We are happy to actually see that some of the management, they do have ex-regulators or ex-lawyer who are sitting on the board and advising them. But again, I think the challenges to these entrepreneurs is really how to sort of keep a good plan in terms of tracking all the development and therefore complying with those along the way, because any single sort of miscompliance or sort of oversight about sort of those regulatory regime, that could be, definitely fatal to some of the key operation or implementation of the good tech that we are seeing right now.
Yeah, I'd like to add a little bit on that. I think to actually relating to the previous point that we're talking about, the data, security, privacy protection, things like that. All I think kind of integrated together in this new in technology and new business model, and especially when it's regional, because that involves like cross-border migration and transfer of information of data, and also I think the access to a different jurisdiction itself will face challenges because this again, heavily regulated, and a lot of jurisdictions require license. But what kind of license that you actually need to get? A lot are still in flux, and nobody actually has an answer to that. So I think, I totally agree with Maureen. I had the same observation on, among the 23 candidates, some of them actually aware of the potential regulatory challenges when they expand their business or setting up their roadmap. And it's also we're glad to see a lot of those teams actually involve lawyers, regulators, or even compliance personnel who have experience in this aspect. I think that sort of mitigate their risk, potentially in the future. But at the same time, there's always a caveat. When you move to a new region, no matter how novel your idea is and how empty the regulation in that specific jurisdiction is now at the moment, there always can be changes coming. And when the change comes, you probably better get prepared for a backup plan. What if that change, that kind of policy regulation change, can be devastating to your practice, to your business in that industry?
Great, thank you very much. I think we'll move on now to the healthcare medical startups, but before we do, I am pleased to announce that we actually have the VC judges selection. So virtual drum roll, please. Our judges have selected for the two startups to go through the finalists, Surgibox and GrandRise Technologies. So congratulations to Surgibox, congratulations to GrandRise Technologies. Well done, you are now joining 5 other finalists that are participating. And now we have the opportunity for you, the audience, to vote for one last finalist to join this elite crew. The remaining startups to vote on are EggLogix, FQX, Fano Labs, and Matchmo. So we will have a QR code which you can access the survey on. I know it's a bit difficult to access here in person. Yeah. Yeah, we will put it on the top right corner as we progress, like the panel itself. No, it's okay. It's okay. We can sit. We will we'll put a new one up on there. Just in terms of the voting rules. We'll put the QR code here in person, but for those online, you'll have access to it right now. If you scan the QR code, you'll be brought to a survey. Please pick one startup. You'll only be allowed to pick 1 out of the 4 for the last finalist spot. And this voting window is time sensitive. We'll be opening it for 20 minutes, and we'll close it at the end sometime during this panel. And hopefully, as we wrap up this panel, we should have the results of the voting itself. But with that said, let's move on now to discussing sort of healthcare and medical. And it's quite interesting that we actually had Surgibox being selected as one of the 6 just now from the previous set of judges. Once again, let's start with the market opportunity question. For these startups, the startups that were in the healthcare space, EggLogix, which is Bring the Joy of Complete Family, ITSE company, which was doing virtual immunostaining using AI, MixCare Health, it was a SaaS and health and wellness platform, SurgeryBox, who you saw pitch this morning, Syncell, a very high-tech company enabling spatial biomarker discovery, and a company called Kencone, which was a virtual assistant to facilitate endoscopy, precision endoscopy. So again, the market opportunity question. Maybe start here. Which one of these companies do you think had the most compelling addressable market opportunity? And maybe we'll start with Bosen.
That's a very good question. Well, look, one thing I'll comment off the bat is I'm particularly impressed with, I think, the depth of innovation that we're starting to see, I think, generally in the region. Hitherto, oftentimes you would see companies that were a bit of like Me Too, taking technologies and that you've innovated, let's say, outside of Asia, but oftentimes in the West, and bringing it back to Asia for, local market, maybe, some advantage around delivering the technology at a lower cost. But look, I can comfortably say for the majority of these companies here, I mean, this was kind of first-in-class, technologies that are really looking to innovate not just for the region, but, for global. And I think part of that is because, especially in healthcare, it's obviously very, very esoteric. But I think we are getting, with the emergence of things such as AI and ML, new types of diagnostics that are based on, genetics and other aspects. Like there is kind of this emerging revolution within the life sciences that enables now new companies and new business models that you otherwise have not seen. And the West doesn't have a monopoly on that. So in many ways, and in some ways, I think we've all heard the concept, or particularly as it relates to China, of like, the sea turtles kind of returning back to getting trained in the West and coming back. I mean, look, what was notable, I think, for the vast majority of these companies is that, a lot of the innovators, they were trained at top-tier institutions globally, but a lot of them were, from the US and from like the UK. So look, to directly answer your question, I mean, I think the biggest opportunity, if it pans out, is probably something like Syncell, only because that technology, while it's very early, it lies at the core of so many things in terms of not just even, really about drug development at the end of the day. And, drugs, pharmaceuticals, biotech, that remains one of the largest, industries globally. So what they're trying to do there is really innovate and understand better how, proteins kind of interact with each other. And at its core, again, this is, very fundamental to drug development. So I was very pleased to see, again, some of the level of innovation that's leading to, I think, ultimately very, very large market opportunities.
I just want to add to that. I do think that Syncell has quite a bit of innovation involved. And if we look into how AI in particular, or machine learning, has been applied to life sciences, it started off with things like radiology, right? And that technology has actually been maturing. The next frontier now is actually what Syncell is doing, pathology, right? So, and on this, I'd like to just quickly talk about one thing. We've all been talking about this thing called big data, but then for big data, we often talk about big data in the context of a small unit of analysis. If we talk about, let's say, cats and dogs, images of cats and dogs online, there would likely be, let's say, hundreds of kilobytes, or at max 3 to 5 megabytes. The things that Syncell has been focusing on, they are analyzing images, let's say, up to hundreds of megabytes or even gigabytes, right? So to me, it feels like we are sort of morphing or evolving from a big small data perspective to a big data perspective. We're analyzing data with a unit of analysis that is a lot bigger than our previous generation. And that would be the next frontier, because right now I think we have been cracking the computer vision thing for a long time, and Sincell has the technology to do it. So.
Thank you. I think what Bosun was saying was also very telling, actually, just from an anecdotal perspective. Watching the startup cohorts over the years now. This is our third annual startup competition now. It's been interesting to see, I guess, the depth of the technology kind of progress. And one of the comments, both from the judges and also even from the ATEC committee, was it really felt like this year there was kind of like a much deeper bench of proprietary technology. And what was very interesting is a lot of it was essentially incubated here in the region, and specifically in sort of Hong Kong and the GBA. Maybe this goes to kind of a broader question. Do you feel that this is representative, and maybe it's quite a question for Bosun as well, representative of the strategy of encouraging kind of life sciences, like essentially, certainly both in Hong Kong with kind of like the deep research bench that we have here, plus even across the border in Shenzhen where they're trying to redevelop it as kind of a life sciences innovation hub. Are we seeing like the early fruits of like those strategies coming through here right now? And actually anyone can kind of comment on this as well.
I mean, I'll make some quick comments there. I think we are. I think the nature, though, of startups is it's, particularly as you look at some of these companies, which are relatively early, it's one thing to have a great technology, but, getting that from bench to getting through usually regulatory development and then ultimately commercialization, I mean, that can be a path that takes, many, many years, many, ups and downs. And a startup community really needs, many different stakeholders and parties to really facilitate and accelerate that. And I think we're at the fundamental, we have technology, and in some ways, again, like I said, it's being imported or brought back in the brains of very smart people that have been trained, again, outside of the region, but also increasingly here. But I think when you sit back, and the one critique I would say is, these companies are early, but how you commercialize and understand how you build a business out of this technology that ultimately someone will pay and you can make a profit out of. That's, I think, ultimately, a big missing piece that I think in the region, it will come over time. And I think it's from, everyone sitting in this room as we get more experience, investors, experienced entrepreneurs that are willing to take risk, to come back and to help teach, mentor companies such as these, to think about how you really make a business model out of it. The problem, I think, the challenge will be, with the exception maybe of China, you have to think about commercializing globally. Many of these fintech companies, other models, you can stay within a particular country, maybe in the region. Healthcare generally, most models is, and where the deepest pockets are, they may not lie in the region. They may lie outside of the region. So understanding the framework and how you market, let's say in the Europe, US, different geographies, I think that is something that this region needs. I think, over time, I think there will be a maturity in that thinking, which will accelerate, I think, the ability for these things to get to market sooner.
And actually, a more broader question on that too, which is, what I hear is that, people are impressed by the level of proprietary technology. It seems at the same level as anywhere in the world, first in class from a technical perspective, right? But from a commercialization perspective, do you feel that a lot of these startups maybe don't have the experience to think about, a broader play beyond the sort of confines of the local markets here? Expanding out into markets like US and Europe. For example, if you were to find like a healthcare company in the US and Europe, a lot of times they would assume that expanding out to Asia is definitely part of the roadmap, right? Is that the case for a lot of the companies that you see here in Asia, or do you think that there is a bit of a blind spot?
I don't want to monopolize the conversation, but I mean, look, I actually think most of them do think about it, only because that is where the market opportunity usually lies. And so you may get, you know, commercial proof of concept or just general proof of concept in your local market. But at the end of the day, I mean, if your technology really is a globally applicable technology, your first market typically is going to be the U.S. Or, you know, it's at this point really U.S. I mean, there are, you know, idiosyncrasies about going into China, but there's a lot of questions around, you know, kind of pricing and willingness to pay. There are large market opportunities, but the U.S. has shown, and I don't want to be too U.S. centric, but the ability to pay for innovation, deep pockets, large, you know, stakeholders that are willing to value, you know, innovation that transforms, you know, that manifests in strong efficacy, let's say in terms of drug development, or, you know, better capabilities of diagnosing conditions earlier. That's inherent in the culture and the healthcare delivery system that exists in the U.S. The frustration, I think, in the region when you think about applying these technologies in the region is I don't think the maturity of the healthcare infrastructure is there yet to support this being necessarily your first go-to market. Because the value per time or resource that you're putting in, your best bang for your buck is go figure out the West. I don't want to be, and I'm not trying to be negative about the region. I think there's massive opportunity. I wouldn't be sitting here if that wasn't the case. But it's kind of like, you know, navigating Southeast Asia. Each country is unique. These are regulated industries, so you've got to navigate each and every country, and therefore, look, it's a lot more work and effort.
Right. Maybe last question on this segment, and it's a broader question. It's around the idea of, given you have a very IP-heavy type of startup, IP-heavy type of company, and, you know, the time frame of it, due to, you know, commercialization, due to regulatory, might be longer, perhaps, than the, you know, standard consumer type company. Where can investors, advisors add value for companies like this as they navigate through this process? You know, is it in the form of helping them to think about what skill gaps that they have in terms of their management team? And if so, you know, how easy is that to solve in the current environment that we have right now?
Sure, others may have views on that.
I guess I would add to, because what Boston said just sort of kept me thinking about sort of what's lacking for these MedTech technologies, which are so good, like from what we heard, but, you know, how do we help them expand to, you know, regional or even global, like the US tech has? I mean, like ultimately, it's when we had the initial screening, we asked them about a lot of questions about the expansion plan. You know, some of them had licensing arrangement, some of them had joint venture arrangements, some of them had sort of thought about had strategic partners in place with MOUs. The question is how much they could, you know, these partners, these MOU, these licensors could actually help them expand in the region. And internally, what does that mean for the entrepreneurial? You know, is that going to be, you know, healthy? Is that going to be sustainable, both from a tax perspective, from a sort of revenue generating perspective? Is those license or and royalty arrangement, is those equity arrangement going to be, you know, sustainable going forward? It's bringing benefit to all the parties as in it. So I think that's a lot of things that the, you know, venture capitalists or investors in the audience, or, you know, hearing these presentations would really help, because ultimately a lot of these expansion, a lot of the business plan in terms of how to expand into the market, they've all been used by other investors in other market. And in order to help these entrepreneurs and these tech to really successfully license or expand in other jurisdictions or other more developed market or other more well-known market, it really need those more sophisticated investors to go hand in hand with them. And I think, in terms of value add by, advisors, I would say, no matter whether you're tax advisors, accounting advisors, or legal advisors, I'm sure we all had a piece to play in terms of structuring a way that could help the business to grow. Make sure there's no deadlock amongst, those who invested into these companies. Make sure that the licensing agreements and arrangements work in a tax-efficient way. In some sense, I think there were a lot of ways that we could help this business. It's just, whom would make the first steps in terms of reaching out to these entrepreneurs.
Great. Let's move on to the last segment, sustainability, and I guess in this case, kind of deep tech as well. The types of startups that we had all across the 23, we had actually quite a few. It was interesting to see how many startups, even not just in the 23, but out of the total 80 plus that we actually received, were focused on, sustainability, the environment, social governance. So we had Grand Rise Technology, which has now been passed through to the finals, which is a smart coating for fruits. We had Good Food Technologies, also one of the 5 who have also been selected already, which is the plant-based pork. We had Green Ore, which was a rock science company. I2Cool Limited, which was offering electricity-free cooling power. Solar Man Air Conditioning, also essentially air conditioners using no refrigerant and 75% less energy. And then Stang Limited also, which was a TTFIC, essentially like a hardware-driven ice pack. Were you surprised about the level of interest in terms of sustainability, startups trying to adjust this problem set? Do you feel, and even Gabriel this morning also talked about what they were looking, maybe on a later stage perspective, a shift towards new energy, right? And maybe this is also reinforced by, the types of comments that are coming out right now from kind of the Chinese government in terms of their priorities. Do you feel like there's a shift right now around ESG companies moving beyond kind of what has historically been more like niche businesses into something that is more of a mainstream market opportunity?
Impressed, not surprised, I would say. And also impressed because it's not just about sustainability. They had real business solutions and targeting real markets, like even Solar Man, which didn't make it. It's a new way of air conditioning, which could be revolutionary if they manage to get the product right. Or the Coolmate. Again, a lot of the paint coat, which reflects sunlight much better. So it's not just sustainability. These are real solutions in the practical world, X of sustainability also, which to me was the impressive part. But yeah, the sustainability trend obviously makes it possibly easier for them to scale up and be viable with an added layer.
I mean, I think a lot of it is because there's just been an evolution in whether it's regulatory or, evolution in kind of the thinking around the importance of sustainability that have now created profit pools where you could actually make money from this, right? And that also influences, in some cases, consumer behavior where, you may be interested in plant-based protein or you're looking for a more economical solution a more sustainable solution because it's within kind of your ethos and philosophy. I mean, it's a generational shift as well. But I think contemporaneous with that is you are seeing at government levels really understanding that, let's just stick with climate because there's a lot of that. I mean, that has real implications on long-term growth and sustainability of your economy. So if you don't address it today, you're going to have issues down the line, right? Notwithstanding, the whole, tailwinds of wanting to, with kind of the view that we need to be kind of saving the earth, right? So I think my point is, again, there are now economic pools of capital that are being created that you can tap, where let's say 10 years ago, it just simply didn't exist.
Yeah, I think this is a very amazing, projects coming up. Yeah, not only, I think in a few years before, you may just listen to big brands that they're creating, eco solutions, for the enterprises or the community. But now you're seeing more and more startups, innovating, their impact solutions. So I think now, especially the next generation, they usually think about impact at the design level already. So even though they may not really, sophisticated at the very beginning, but at least they will think about this element putting in their solutions. That, benefiting the whole company, the whole community, or as well as the planet as a whole. So I think you see in the lifestyle, like food, you see electronics, you see a lot of the different painting, all that. This actually can be, well received by the general public, and a kind of the also having the educational elements in that. So previously, maybe 5 or 10 years, you just see big brands doing that. But now, more and more, new solutions coming out from the young generation. They already have some ideas, but they need to gather all that expertise in a team, supporting by, the whole ecosystem stakeholders like investors, like accelerators, or even cyberport incubators, giving support to them. Then they can grow in down the road, that even getting their own startups sustainable because of the sustainable solution. So I think that's the new trend, especially in the new generation of the, impact by design, as I said,
I think that's very interesting. I think when I think about like the startups that participated, and even just this question of like which is the most interesting addressable market, sometimes I wonder, sustainability itself is a catch-all, right? And it maybe is not too descriptive. And it made sense from a marketing perspective for consumers. It made sense as kind of a niche sort of play. But I wonder right now if we're moving now beyond just the branding of like ESG and sustainability, and actually seeing companies with real technologies, real business models that are actually kind of disrupting within kind of like the sectors that they're in. So, what is termed as sustainable is actually just a viable alternative way of doing business or way of innovating within each particular industry. So it's moving less from being kind of a niche and more of, this is what's happening. I think that's also aided potentially by, a great grassroots understanding of, how necessary a lot of this stuff is. I think you see more in consumer companies, but it's very interesting to see this from the technology angle, that we're seeing people really trying to innovate on these companies themselves. So actually, just on the technical side, like, was there any kind of technical innovation in these early stage companies that really impressed you, that kind of stood out in your mind?
I'll start. I'm the geek here, so I like Ecologics a lot. It's a bit underrated in the sense that we meaning we humankind at this stage right now. We are not ready for it yet, I would say. It takes a lot of education, a lot of mindset change, mentality change for us to accept that. We meaning when I was in my previous VC fund, we looked into a company that is very similar. It's called genomic prediction. Right now it's called LifeView. It applies machine learning or deep learning to sequence DNA data from fertilized eggs, so IVF and fertilized eggs. And essentially what you can do is you can screen for those fertilized eggs with better human attributes, like higher IQ, taller, more handsome, blah, blah, blah. And as you can imagine, there ought to be a lot of moral, ethical, legal complications involved, right? But then we meaning in my previous VC fund, we were asking our advisors what they think, and they were saying that in about, let's say, 30 to 50 years from now, like in the very long term, it would be irresponsible for us to have a baby or to have babies without going through this, without DNA sequencing and understanding how that your baby would pan out. And I think that takes a lot of, that would take a lot of effort for us to sort of educate our children, let's say, or have them explore things way beyond what we ourselves can at this stage comprehend. Because think about it, I mean, when we are, having babies at this stage, we are leaving the process to a lot of chance, right? Probabilities, chance, and we're not really cognizant of the fact that we as a human race, as humankind, may not be evolving in the most optimal or optimized sense. So yeah, that's actually my favorite amongst all the startups.
Great. I think we'll just do one more set of questions just to round off. And I guess we talked a lot about what we saw over the course of these 2 weeks, course of the 80 startups, 23 startups, even the 6 who pitched this morning. Maybe for each of you, could you talk about maybe one thing that you were surprised that you didn't see in terms of either a startup or industry or a business model that you would have expected or would be more enthused to kind of like to see? So this is kind of a question for all the entrepreneurs out there, the people who are actually thinking of like businesses that they would like to start. Is there any kind of unseen opportunity that you think that people should be spending their time on that perhaps you didn't see over the course of the last 2 weeks? Anyone can start.
Maybe renewable energy. Renewable energy.
Renewable energy? You're surprised you didn't see a lot of renewable energy? Yeah, I think so. I think especially given the amount of government support top down and how big a priority it is. Although some of these ones kind of fit in.
Broadly, but
yeah.
New technology to generate renewable energy.
Yes. Okay.
I'll be quick. So cybersecurity.
Cybersecurity.
That's huge. And then I guess the rest, chipset, quantum computing, space tech. But then those are more frontier, right? So.
Sounds like we need to reach out to those sectors for ATEC. That's if you have anyone that you'd like to recommend. Anyone else?
I would like to see more technologies which bring, like logic, which bring to the human birth equalizations and, fertility. I would like to see a bit more of those, given, I guess, it did get people excited, but if there were a few more that we could see, that would be great.
I'm surprised we didn't just see, it may be a reflection of the times, is just kind of more kind of enterprise software, SaaS, kind of classic businesses where I think, as we think about driving efficiency and productivity, I still think technology and software is going to be a key there. Maybe integrating more kind of AI and ML. That's just, I see a lot of that, and I didn't really see a lot of it being presented here.
I think that's true. It was quite different, I think, this year, actually, the cohort. And some of that is reflective, I think, of the participants we had in the screening process, what appealed to the various judges and selectors along the way. But it's true. Like the previous cohorts, I think there was a much stronger push for enterprise SaaS, across the region. So that is quite interesting.
Yeah, maybe because of the COVID, more people will think about converting some institutional application in healthcare to home care. Yeah, maybe using IoT, using something that could be generally well received, easily understood by the layman. Yeah, but just complementing, with the medical practitioner in a way. Yeah.
I guess outer space, kind of more solutions for us to, to expand, or not only just expand the territory, but also, kind of embrace a broader space, given what's going on this planet. We should have a backup plan.
Oh, very nice tying in Gabriel Lee's backup plan and applying it on a more global scale. I like that. Actually, space was actually on my wish list as well. And given kind of recent announcements that, maybe even Hong Kong has a part to play within a national kind of space strategy, hopefully that means that we will see a lot more of these kind of deep tech, kind of these more moonshot type companies, starting to develop here. But with that, I think let's finish off the panel. I think thank you very much once again for our judges for spending their time and sharing their insights with us. You guys have been troopers. You've been participating across these last 2 weeks, and I think it just goes to show how much support that ATEC has, given this deep bench of advisory and investor talent. So thank you very much once again. I think we are ready to reveal the audience vote. So once again, virtual drum roll. It is Matchmo. Matchmo is the audience selection for the final spot for the ATEC 2022 finals. So congratulations once again to Matchmo. And we will see all 8 finalists, which are Augmentus, Cheetah, Good Food Technologies, i2Cool, Syncell, which we talked a lot about, GreenRise Technology, we saw this morning, SurgeryBox as well, we saw this morning, as well as Matchmo. So congratulations to those 8 startups, and we will see them again in December. So I'd like to just close off by just giving a big thank you once again to our esteemed judging panel on stage here, and also the ones who joined us this morning. I'd like to thank all the startup participants, all of them, from the 80+ startups who submitted, to the 23 who qualified as semifinalists, and now to our final 8. I'd also like to thank the alumni clubs. Over 40 alumni clubs have been a part of the process of ATEC, have essentially acted as general partners in terms of going through their networks and selecting startups that they would nominate into this process. So this is very much an alumni-led process that we have here. And I would also like to give a deep thanks to our sponsors, UBS, Morrison Forster, Baker McKenzie, KPMG, Cyberport, and once again to Invest Hong Kong for providing this platform here today. And no thank you would be sufficient without a shout out to our ATEC organizing committee, our long-suffering ATEC organizing committee, of the steering committee, the volunteer groups, and the support of our advisory council who have been with us each step of the way. And just a big reminder that this is not the end. This is only halfway through. This is semifinals. So we shall see you at live and in person, as well as online, at the ATEC 2022 final conference event, which will be on Saturday, December 2nd, held in Cyberport. So do mark your calendars, and hopefully we will see you all there. And with that, I'd just like to close today's events by saying thank you, and hope you enjoyed the show.